Don't do that. Anyway, no, do it. Good morning, everybody. Welcome to day 2 of CB Blockchain. Thank you for coming so early. We originally were going to start later, but we had a great opportunity to offer you a workshop from Andrey Verbitsky on token economics, so thank you for coming to join us. He'll talk for about 30 minutes. Then we'll have questions at the end, and then we'll go into our regular programming with speakers, panels, investors. Lunch today will be 12:30 to 1:30, and the expo hall will be open until 4 o'clock, although the session ends today around 5 o'clock. So that's the schedule, and we'll start off with Andrey right now. Thanks.
Okay, can you hear me? Okay, you can. Perfect. So let's talk a little bit about the token economics. We have only 30 minutes, so we cannot cover everything, but we will try. Let's start for the first fundamental question. What is exactly the value of the token? We are speaking about the tokens, we are selling tokens, we are buying tokens, we are creating tokens. But what is the value come from? How we can create value, how we can manage value, how we can work with it, and how this value is correlated with the business itself. And the funny thing is that tokens are usually not backed by any real resource, a lot like traditional fiat currencies. They're just concepts, a lot like traditional fiat currencies. And the demand for the token is artificially generated, a lot like traditional fiat currencies. In the case of the fiat currencies, it's the government who creates demand for the currency itself. In the case of a token, it's a company, and it's business of the company who creates the demand for the token. So what is the value, you may ask? And think about it a little bit. What is the value of a currency? If there is nothing more than the concept, what is it? And the answer is that the value of the currency and the value of the token is trust. Nothing more but belief. And the stronger is the belief is, the more value is in the currency, the more value is in the token. So let us think about a little bit how we can create and manage this value. And if we think about the value of the token as a value of the trust, we have a very perfect example from our life. It's a credibility of the person. Think about it. It acts a lot like that. And like a person can have an intrinsic credibility that can be grown over time by doing and achieving. So the token can do. And we have a perfect example. That example is a Bitcoin, a digital gold in the world. But this process, unfortunately, takes time. It wouldn't happen overnight. For the Bitcoin, it took 10 years to become famous, to grow intrinsic trust and to gain intrinsic value. Unfortunately, in a business environment, we don't have a luxury to spend 10 years to grow the value of the token. So we need a shortcut. And we need a shortcut in our life as well, because we need our credibility right after we started operating in an environment, in a business environment. So what we do when we need a credibility in a real business environment, we ask for introduction for a person who already has a credibility. Or we start working for a brand that already has a credibility. I'm from Google. I'm from Microsoft. I'm from Facebook. So we do the same with tokens. Initially, on the first period of life of the token, this is exactly the team and the business who give the credibility and value to the token. And this is very interesting, because it means that the value of the token at this particular moment of time is not connected to the token itself. You can think about that value like a cloud on top of all the tokens, and tokens like a small boxes. And the value, that extrinsic value, the credibility of the team, the credibility of the project is evenly distributed among all the boxes. And what would happen if you destroy a token during the first period of time? Well, you destroy the box. but you wouldn't destroy the value, because the value is not in the token itself. It's in the team, and it's in the business. So you just redistribute the value among the rest of the tokens. So that's funny, but OK. By destroying token, you actually increase the value of the rest of the tokens. OK. Now, if we accept this theory, at least for a moment, let's think about the ICO as a three-step process. The first is the ICO itself, before the token sale is ended and before the token is issued and before the business started to operate with token. This is a pure marketing part, nothing more. There is no economy. There is no real product. It's just a presentation. It's a huge marketing campaign, and the goal of this campaign is to increase the credibility of the team and to increase the credibility of the project. Because this credibility we would need on the later stage to power our token. Then the party is over. We raise the funds, ICO ended. Now, we have a huge amount of tokens in the market and a very little demand for these tokens. What would happen with the product if there is a very huge supply and a very little demand? The price of this product would go down, unfortunately. And it doesn't matter what was the price tag during the ICO. The real economical value, the real value of the token after the ICO, unfortunately, is close to zero, realistically. And it would take time until the demand for the token will grow enough to reach the supply. And at the point when they intersect with each other, when the prices would be, the token would get a real price. But before, we need to support the price of the token, and we need to create the value of the token artificially. And this is very critical during this particular time to make sure that we can reach a tipping point soon enough. So, because if we wouldn't do that, we will spend our money to support this price, and we will spend our money to support our token. And if it takes us more than 2 or 3 years to support our token, well, we can probably spend all the money we raised through the ICO process. So when we design a token economy, we specifically design it for this particular period of time after the ICO, when we need to match the price of the token with a real business economy, with a real demand from the business. And our goal is to make sure that we can reach this tipping point soon enough. And how we can do it? Well, since we are talking about the trust, we are talking about the behavioral economy and behavioral finance, which means that to support our token, we need to create a set of beliefs in people in the market. We cannot satisfy the price of the token by pure economical reason, but we can do it by creating an impression. And this is exactly what we need to make happen. How we can create impression? We need to communicate a very simple idea, that the price of the token and that the value of the token will go up over time. What would happen if people do believe in this idea? People would start treating your token as something with a value. They would start keep it. They would remove it from the exchanges. They would keep it on the wallet. And you would need to spend less time and less money to match the real demand. And this is exactly how the real currencies operate. Imagine what would happen if all the people who hold the United States dollars would spend them simultaneously. It would destroy the economy and the dollar overnight. And only belief keeps dollar from ruining. And we need to create the same belief for our tokens. If we wouldn't be able to create this belief, the token will die. If you would be able to create this belief, the token will survive. So what is the role of the business in this period of time? Business is a vehicle, like a rocket ship to deliver your token to the moon. Your business needs to create an artificial demand for your token. The goal of the business to lend trust to the token, to help you to sustain the value of the token during the first months of the token's life, until the value of the token, the intrinsic value of the token, will start growing itself over time. What would happen if this process will take some time and successfully will go, for example, for 5 years probably? We can reach the point when the intrinsic value of the token is big enough for the token to become sustainable itself. Token don't need your business anymore to survive. You create a second Bitcoin, you create a second Ethereum. Your business is not needed to support your token. You created a sustainable ecosystem. The power of belief in the value of the token is strong enough for the token to become independent from your business. And even if your business would die during this period, after this period of time, your token will survive. That's very funny, but this is true. So what we need to think about, we need to think about the business of the company and the business of the token as two separate businesses. And the goal of the company is to help the token to survive during the hard time and to survive long enough to create an internal intrinsic value. So, how we can create a model that would support something like that? First, we need to start thinking about the demand. When we give tokens away in any forms, it doesn't mean anything. Because people who will get something for free, they will just try to sell it immediately to gain some profit. And what would happen if they put their tokens to the exchange? Nothing would happen, because if there is no demand, nobody will buy this token from them. They will try to put new tokens with lesser price, with lesser, until the token would die eventually. So when we think about creating an economy for the token economy for the project, for the ICO, we need to think about the demand first. And this is the most critical factor for us. How does it work? So I believe that some of us, please raise your hand who has an ICO ongoing right now or thinking about ICO. OK, enough people. So give a minute. Think about how you can create, who in your ecosystem, in your project, in your ICO has to buy tokens to use them inside of your product. Not people who give it, but people who need tokens to buy, if there is such people in your system. 1 minute. OK, everyone found it in your project? Raise the hands who didn't find any person who need to buy tokens by natural reasons. Well, perfect. Now we have a foundation. Then think about how many tokens they would need to buy in order to create a high velocity of your token over the period of time. You will probably raise 30 or 50 millions by selling your tokens, and which means that your business has to provide velocity at least 10 or 15 millions per month in order to every token to be in act, to operate inside of the ecosystem. And we have a premise that at least 2/3 of these tokens would still be held on the wallets. Very, very optimistic promise. Because realistically, every token can go to the exchange immediately. Think about it. Demand is very crucial. If we cannot create enough demand for a very short period of time for our token, we need to create this demand artificially. We need to market make our token on the exchange. We need to create this, because people would go to sell our tokens and the only buyer would be we. Not the actual users of your product, not the actual buyers of your token inside of your product. Only you, as a company, as an issuer, can be the token market maker of your token. And our goal is to create an ecosystem in which the demand for a token would grow exponentially. It's okay. If your solution is centralized, and your economy is pure speculative economy, it's pretty easy. It would work exactly like you buy back your tokens from the market just by forcing people to pay you in your tokens. So in order to create enough deficit, you just need to buy back your tokens. You need to provide your services for the amount of money you raised. So you issue tokens for 15 millions. You provide services for 15 million, so no more tokens in the market. You create a deficit. Deficit will go up. Unfortunately, this model is not for the North American market, and it's okay. This model has some issues with law, especially with Securities and Exchange Commission. So we need to think about how this token would operate in a more decentralized environment. And we have two models. First model is a marketplace. The best ideal solution you can create is a marketplace when your token would operate as an internal currency. Advantage of this model, this marketplace would grow faster because of the effort of others, not just your efforts. So it's much easier for you to create enough demand for a very short period of time. Disadvantage of this model? Well, two-side market is hard to create. And for most startups, they're product or service startups, not a marketplace. So you need to adapt your model. In your initial product, your initial service, you need to actually, so you need to create an ICO not for the product or service itself. You need to imagine and create a marketplace when products and services like your product and service can operate and can act freely. Second model is when we have a blockchain solution with mining. The most ideal model for actually this is the most ideal business model for the ICO, because there is no conflict of interest. For a real business, when you issue tokens, when you sell tokens, you are not providing any equity for people who buy your tokens. But you make unspoken promises that you will grow your token in value, which means that you need to have a leverage to grow your token. And the only source of your leverage is your business. In a traditional environment, when you give away equity, when you put money inside of your business, when you use your money from the business to grow, to put it back in your business and to grow your business, there is no conflict of interest. Because if the size of the business would grow, the size of the pie for the investors would grow as well, and the value for the investors would grow as well, so there is no conflict. In a case of ICO, there is no direct connection between the value of the company and the value of the token. So when you put money into the business, actually investors might think that you are misusing this money, because instead of growing the value of the token and satisfying the initial promises, you grow your business. It doesn't bring any value to the investors. And the more product or service-oriented business is, and the more product or service required financial attention, the more serious the conflict of interest between the token holders and between the real business environment. This is why not any company can run ICO and be successful. Why blockchain then? In the case of the blockchain, the only product and the only service company has is a token itself. So no conflict at all. And this is why, for example, the most successful ICO Okay. So this is why the most successful ICOs, the biggest ICO, is always related with companies that have a very heavy blockchain-oriented businesses who created their own versions of the blockchain. But what about the rest? If you can't create a blockchain for yourself, what's your way? Actually, there is a very simple but interesting and effective trick. You may have an ICO without having ICO. What does it mean? It means that you do create the same model of economy, closed-loop ecosystem with limited supply of your tokens, but instead of having a private sale or public sale and offering your tokens to the investors, you just put them directly to the exchange. 10 or 15%, maybe 16, maybe 20%, 30%, no more. What would happen? The system would act exactly as it would act after the ICO, no difference. But you are the owner of the most of the tokens. Why it's important? Think about it. When you give away equity, you give away part of your company. And people don't like give away equity by that particular reason. But what happens when you give away your tokens? Yeah, you keep equity. But you're actually giving away part of your future revenue. And the more tokens you give away, the more future revenue you give away as well. So if you give away 80% of your tokens, you give away 80% of the future revenue, which is exactly the same. Revenue is equivalent of the value of the company. More revenue, more value for the company. No difference, equity or revenue. The consequence for the founders are the same. You just borrow part of this revenue up front when you sell your tokens, with a huge, huge discount, by the way. So, if you can create blockchain, you can be probably a very successful ICO. If you cannot create blockchain, but you cannot be a very scalable company, if you are not from the real world, I mean, like you are not connected with the real resources, you can be successful as well. If you do have a heavy, if your business does require a lot of investment, if your business, if you need a lot of money to develop and keep growing your products, not in terms of marketing, but in terms of R&D and technology. You need to think twice, and actually you might decide that you don't need a traditional ICO, you just want to tokenize your business without having ICO. Because if you have this 80% of the tokens for yourself, well, you can do you can grow the value of your token as well as you can do it when you do traditional ICO. But because you control most of these tokens, most of these assets, you need much less money to do so. And it's much easier, actually, for a lot of companies to grow the value of the token to $500 million valuation than to raise 50 or 100 millions through the ICO process. Yes? Not equity of the company has nothing to do with. Okay, so the question was, is it better to tokenize the equity than to have an ICO? Not exact. Yes. Okay. Yes. Not exactly. Actually, when you have an ICO, you have two businesses. One is the business, is a traditional business of your company, and the second is the business of your token. And you do need your company to grow the business of your token, but they're independent. And if the economy is well designed, they can act and sustain without each other. You can drop your token at any moment. You can switch to other token, and the company would still operate successful. And you can destroy your company, and your token would be still successful as well. You just have two exits: one from the business, one from the token. Yeah, please.
We have a mic.
Mm-hmm.
And I just want to make two comments. One, what you're suggesting is illegal. Two, it doesn't make economic sense.
Well, everything doesn't make any economic sense.
So what he's suggesting is basically pumping and creating artificial demand for security, which is illegal in the United States. I can go on and on about this, right? And the second thing, there is basically, from the economic standpoint, once you create artificial demand through touting, where there is no true economic value, the asset does not have it. It doesn't exist.
Well, may I ask you a question? What is the economic value of the United States dollar?
It's a means of exchange. It's supported by all of the goods and services that are provided created by the economy in the United States, GDP.
What would happen if every person would decide to spend these dollars?
That is never going to happen.
Because?
Because it's impossible.
This is a belief? I believe. Yes, yes. The first, I will try to address the first concern. Yes, what I just said could be considered as illegal. But think about that. What would happen if I buy all the cars of very rare series, destroy 90% of them, and put the rest of the market? The same. We do operate in an environment with limited supply for most of the resources. And every resource that has a limited supply can be potentially used to speculation. And this is something we cannot, okay, with our existing knowledge and with our existing technologies, with our existing political systems, we can handle this conflict of interest.
I think this point that you were just having here needs maybe a little bit more elaboration, because I don't know, I haven't understood it fully. Nadia is obviously an expert, and I think we should really understand her perspective. And you're on the other side as an expert also. So could we just go down to that point again? I didn't hear you talk about pumping and dumping. That is illegal, and I think we all understand that. And Nadia made the point yesterday that taking something that's artificial, right, that there's nothing there, so to speak, and pumping it and touting it and going on social media and saying all these things when there's really nothing underlying it, there's not a team, there's nobody in place, that's illegal, right? And I think, Nadia, right, you would agree? Yeah, so that's her point yesterday, right? And I didn't actually hear you say that, okay? So I wanted to try to understand what you said that got her upset, right? To, not upset, but to respond, to say that what you are proposing is illegal. I think it's, I don't want this to be lost here, because I think there's maybe a good point. So could between the both of you, could you kind of try to go back and elaborate? Because I didn't hear you say pump and dump. We know pump and dump is illegal, but what is it that he said, Nadia, that's not right? That would be really helpful.
I don't know. To me, it's just, very simple and plain. So I would like to elaborate. How do you believe that creating an artificial demand for something that does not exist, that doesn't have any real economic value, does not have an ability to provide revenue, should have, is anything other than illegal?
Well, let me ask you a question. What is the most oldest and successful corporation in the world? Yeah? Exactly. What is the real economical value of the Catholic Church? Exactly. People are, unfortunately, the creatures of emotions, and and there is no such a thing as a real value, just perceived value. What is the perceived value? It's a value of the current belief of most of the people in the society. Can this belief change? Yes, over time. History teaches us that it is possible. But again, what is the value of the gold? Belief. What is the value of the diamonds? Belief, and it was created artificially. We know that. This is a history. Almost any resource we treat as a treasure was artificially created.
So then what are we doing here? Writing software, creating blockchains. Why don't we all start religions?
That's it. What is blockchain? It's a very good marketing. And actually, because people started to believe that smart contracts can replace lawyers. That blockchain is immutable enough, so we can trust the blockchain. And this is great.
Sorry, a couple questions over here.
Yes.
Thank you. Great point that we need to spend a couple of minutes here. Maybe what I understand, what Andrey said, which created the confusion here, is value really is in the eyes of the beholder. We assign value as we understand to anything. It's purely speculative, purely personal. And then we have legal ways of having trades and exchanges supporting these speculations, no different than some other things that we do. Is that fair? Is that where your point lies?
Absolutely.
And we recognize that his point is very true, and we also recognize SEC's point is also very true. Maybe somebody in this group can help us stay clear on both sides and not get in trouble.
So I think what you said about the ICO being separate from the business helped me gain some clarity on it. The way I kind of see it, though, is from a cash flow perspective. I don't necessarily agree that the ICO is related to revenue at all. I see it from a cash flow perspective where an ICO is an innovative source of cash flow for the business and not an operating, income from operating activities, which is revenue.
Yes and no. You are absolutely correct if you are talking about pure tokenization of the business. But when we talk about the ICO, well, we are all here understand that even if there is no any promises made, we actually promises our investors, we need to be clear about that, to increase the value of the assets we provided them with. And this asset is the token. And this is the only reason people are willing to give money during the token sale, initial token sale. They expect profit. We might not put it into white paper because it's illegal. We might not sell it out loud because it's illegal. But this is the only reason why. And if you need to increase the value of something, you need a leverage. And the only leverage you have to increase the value is to grow. I mean, you cannot grow your business fast enough. Maybe for such businesses it's possible, but for the most businesses it's impossible to grow the business and scale it as fast to create a natural demand for the token 100 times more than it was initially issued. So imagine you issue token for 50 millions. 10 times more in revenue. Very good result, but it would definitely takes time. Not 2 years, not 3 years.
Yeah, I think the investor is kind of making a bet either on the tangible or intangible value of what they see in the business.
Sorry?
When they invest in the token, the perceived value is either intangible or tangible. It just kind of depends on what the investor values.
Well, 20x, investors expect 20, 30, 50x. Just look at the coin market cap. This is the argument for the investors. For the successful token, an average increase in price and in market value is 20 times. Highly risky market, very volatile market, but this is why they're willing to invest.
Wait, so one thing about the blockchain is the fact that you don't need to go to investors that need 20 or 50x. There's efficiencies in the marketplace that happen automatically where individuals in India, for instance, if you can shave them 20, 30% on interest in their capital, they have to pay to transfer it. They don't really care as much as you're not costing them so much. So the economic models differ for each individual implementation that you're trying. So your investor relations and how that token or how that system works also has to be dynamic based upon that. So I'm not quite getting your premise of having to increase the value of the token. Some tokens, you actually want a flat value. Some tokens, there's different assets and different utilities for each one of these. That's why we classify them.
Yes, but why would investors buy these tokens? Efficiency to whom? Investors want a return. Investors in a business of getting profit. They don't, I'm sorry, but they don't care and don't give a shit about the business itself.
Yeah, here's one. So on this same topic of the value of the token and increasing it, I'm wondering from the SEC's perspective, if the value of the token is increasing due to what can be purchased with it, and if you're promoting what can be purchased with the token, but not the token itself, and thereby, since there's value in what's being purchased with that token, let's say at a place like, in a situation like Chuck E. Cheese, and they've got better and better products that you can get with those tokens, and the value of those tokens then go up, is that illegal?
Well, actually, you just created a token that is backed by a real asset. Yes, the price of the token would go up with the price of the asset. If the token is only can be used to buy this particular asset. And the amount of assets you can buy for a token is limited. But at the same time, there is a very simple way to calculate the potential profit out of this token. Again, this is a good token. This is a tokenization of the business, but it is not for ICO. You can convince investors to buy these tokens. But
yeah, hi there. There were a bunch of things you mentioned previously. One of them was that the business value of the token and the company are separate.
yes,
And then you mentioned that the token would survive even if your company ceased to exist. Okay. And then you said that the value of the token will grow as the revenue grow. So I see a contradiction there, because if your company ceased to exist, how would you make revenue on that?
well, you see, as I told, initially token has no value. Initially token has no intrinsic trust. It takes time for the token to gain this intrinsic and grow this intrinsic trust. And until this happens, Yes, you need a company to create a demand for a token to fill the token with value. But after the value of the token grow and after the token has its intrinsic value, you don't need company anymore. Bitcoin has nothing. Bitcoin has no business behind it. Ethereum has no business behind it. Almost any currency has no business behind it. Yes, okay.
Sorry, I would like to object. When you said that the Ethereum doesn't have any business, I don't think that's correct because it's a platform. The Bitcoin is most based on speculations and hype compared to the Ethereum that actually provides a smart contract solution for the companies to do an agreements or immutable contracts.
Well, if you calculate the price of the transaction on the Ethereum, it's not a business at all, it's a pure speculation. You wouldn't pay for a cup of coffee with an Ethereum. You will pay much, 7 times more for the price of the transaction. It's not sustainable economical model. If you think about the good economical model, Ripple would be a better example.
Okay, so I just got one last question. So,
okay, sorry, we don't have time to continue the dialogue, but this is a great, lively discussion to continue during the lunch hour. So let's thank Andrey for stimulating the conversation. And thank you to our audience members for all your input. This is the type of lively dialogue that we want to provoke in an audience like this of very educated, sophisticated investors, professionals, tech executives, so that we can continue this discussion and help create the framework for the new marketplace. I'd like to now present our next speaker, which is Gabriel Sankar.
Hello, everyone. All right, thanks for, before I initiate my talk, I want to thank Rafael for inviting me to the event. It was at last minute, so really thanks for that. And also, I just wanted to tell you a little bit more about myself and what am I doing right now in the crypto world. So basically what I'm doing in the blockchain space, I'm involved in several advisors, in several ICOs, including Crypterium, as an advisor, where I help basically bring value to these companies in terms of presenting, introducing strategic investors, partners, also relations with the crypto exchange for utility tokens. And also, more recently, I've been doing events in New York, London, and Tel Aviv, in where I gather a small group of investors, 20 plus investors, so they can show the ICOs I've been working, or projects in general. I've been working to basically, pitch the idea, and it's quite private. So if you're interested in that, please do let me know after I talk. So I will be happy to help you, whether in your ICO or in the dinners or the exchange. I'm happy to help. Off the chain, off the blockchain, what I'm doing is I got my own company, which is called Mobiletourlife, which we make AI solutions to the enterprise, basically in the chatbot space and robo-advisors. And we do also a little bit of gaming solutions for the same enterprise we are working. So that's outside the blockchain space, so happy to help if you need any of those areas. We can talk later. So right now, I wanted to talk a little bit in this short talk, these 20 minutes, about how do I see this new token model economy, starting with Bitcoin, actually, because it's the first try to make something really, really disruptive. Because always my friends joke with me and say to me, these people that are not in the blockchain space, they say to me, okay, but why not use PayPal rather than Bitcoin, right? Because I got it, no? So basically what I say to this kind of people that are beginning to understand this is basically with Bitcoin and the blockchain, we are eliminating the third parties. So that's key to the next move, right? So because PayPal and Airbnb and Facebook are still centralized, not decentralized. So Bitcoin is the first try. I will talk about other as well, but Bitcoin is the first tried and successful one that is doing that, eliminating the third party, which is a protocol that gains trust between both parties. So that's the first try. It's not perfect Bitcoin, I understand that, but it's still a great technology. Obviously, we have Ethereum, and we will have new blockchains coming soon, which are faster and more, scalable. That's fine, but at the end, what I'm trying to see is that what we're seeing right now actually is that a state and money could be separated. And what I mean by that is basically the states, as are using right now, actually, they control money, basically, right? So they control how do you spend, how do you transact, how much you can withdraw from your bank. So actually, your money is not your money. So with these technologies, and in combination with other ones, what I will talk later, are basically separating a state from money. So I always joke with my friends, in history we see, for example, state and church were always, one piece. So it was really, really corrupt empires and countries and nations that were controlling pretty much everything. Then we saw that a state got separated from church, at least in some nations, and it became a little bit better. It's still corrupt and it's still controlling the money. But now with the Bitcoin on the blockchain, we're seeing basically a state is separating from money. And eventually that will continue to happen and is unstoppable, in my belief. Sorry. So that's basically the main thing here that I wanted to talk to you is that money is becoming decentralized, obviously, and free from state. So obviously that freaks out states because they want to control that because that's a huge piece of the world and the game per se. But at the end, I guess they shouldn't be afraid because, in a more philosophical way, because they should collaborate and bring this innovation, not kill it, right? It's okay to regulate, it's okay to take out the scammers, we don't want that, but at the end, they shouldn't be killing the innovation, otherwise, obviously the innovation will go to another place, and the cash and the capital will, pretty much leave the country, right? So that's quite important. So what I believe is going to happen this 2018 in the crypto world, well, this year is key for the decentralized exchanges. And why I say that? Because we need more decentralized exchanges for bringing more volume to these kind of entities, and also crypto to crypto. Again, why is that? Because if we do it crypto to fiat, again, we are trusting one part of the process in a third party, in the fiat, in the system. So again, obviously, we cannot right now say no crypto to fiat, but down the road, it should be only crypto to crypto, because obviously you have all decentralized, and will be more tokens as well. So we have right now like hundreds of tokens, thousands of tokens. I believe will be more and more and more. From, let's say, a token for the school of your kids that are going to make a project, from, a token that will use the government of China to transact oil purchases, for example. So I believe it will be more and more tokens because we are now in an evolutionary state of the cryptocurrencies. So a lot of them will die. We will have a few ones down the road, but this is needed, this kind of innovation, this kind of experiments, and more ICOs and more projects, good projects, obviously, with good solutions, in order to filter and clean the process and the system down the road. So that's basically key in this space. Obviously, ICO has been last year the main topic, the new way of funding. So new kind of organizations will be created from now. Obviously, this is already happening, and it will continue to happen. And society will act differently because the way people work, interact will be more in a decentralized way. You will pay your coffee with crypto. You will earn only crypto. So I guess my advice would be, because right now people that owns Bitcoin or Ethereum, they're not really expanding those cryptocurrencies. They're basically holding it, speculating, waiting to go up. But I guess the better for the economy would be to use more of the crypto in a daily basis, that you pay your expenses in crypto, you earn crypto, and that will become a healthier ecosystem, right? Because not only holding it, right now everyone is in the storage position and value position, no? So that's key, and basically, I believe crypto markets will reach at some point a trillion-dollar market. So that's key. It's going to happen. It's not going to happen tomorrow, but that's going to happen. And all assets that are in the world right now will be tokenized to some extent. Obviously, with better blockchains, faster and scalable, but that will happen. So that's pretty much my view of how do I see the following years, perhaps, with more tokens. And also, obviously, there is a lot of volatility right now with the crypto market. That is really not the idea, because you cannot have these cryptocurrencies as a unit of value, because, I mean, they are valuable, but it's so volatile that people are not using them so much. So on the other hand, they told me, guys that are outside the industry, like, no, Bitcoin is really volatile, and Ethereum, I don't like that. But at the end, so many currencies in the world, fiat currencies, or very poor countries, or corrupt countries, these currencies are more volatile. Actually, I'm from Venezuela, and Venezuela has been having inflation insane, so it's actually more volatile than Bitcoin, ironically. So those kind of examples, for example, for countries that want to adopt cryptocurrencies, I believe down the road will be the path to go, cashless societies. That is already happening, for example, in Sweden, or you have Estonia example that they are doing the whole country digital. So that kind of improvement will help the ecosystem as well. But I guess it won't be like a government creating the currency in the digital platform and controlling it. I guess the idea is here more an individual approach to make this kind of advancement. So that's also the other key thing. Anyway, I don't know if you have any questions related to, yeah. Yeah, so basically I'm going to say the question. I just didn't hear it because he's asking me, I was talking about state and money getting separated thanks to the Bitcoin, which already happened. And now these new trends of countries adopting cryptocurrencies or even creating their own cryptocurrencies, such as the case of Venezuela. So obviously, I'm all in nations down the road going on the blockchain, going crypto, supporting crypto. When I mentioned the thing about state and money is basically how the financial system has been changing in the last years, because actually Bitcoin was completely separated innovation from governments. Now, I do believe that governments should be in the forefront to adopt these technologies, but also leave a space to innovation. What is happening to Venezuela is really tricky because obviously, they have to avoid sanctions and they have to create this kind of mechanism. But sadly, I mean, I don't see that the project is bad per se in the technology or the way they want to handle it. Sadly, Venezuela is a really corrupt government and it's pretty much driven by narcos. So they want to money launder using the technology. So, I mean, it has goods and pros and cons in that. So, a country like Sweden, Estonia, a serious country, and being the forefront in that technology is fine. But using that for money laundering, for the narcos, I don't believe that would be the path to go. Obviously, in their position, they're trying to escape the sanctions and transact in other coin. But again, as mentioned, it's quite dark there, what is happening. Yeah, I don't know if anyone has other questions related in that space, or should be fine. Yeah, that's a really good question. I'm just going to recap the question because it's interesting. He's basically mentioned me how do the states will basically operate without cash or without money, non-crypto, right? Something like that. So, and basically, these new technologies will emerge into a new model of the state, I guess. Governments, I believe, are now in a position really uncomfortable because it could be quite radical to say that governments are going to disappear right now, but eventually they have to change the model for themselves as well, because when you see cash or the fiat currency as we have it right now, obviously it's also quite messy and dark, the way they produce the money, and it's basically not so backed up as it was before. I mean, the cash has been functioning the last 1,000 of years, so I don't see why not cryptocurrencies could replace that old system without disappearing the government per se. But they have to be really, really smart to step away and allow the society to work in a different manner. Not only the crypto, but as you mentioned in the digital space, like Estonia or cashless society. I mean, cashless society will happen for sure, really, really soon, not related only to crypto. But again, I believe that's a good question. I believe might be disappearing or changing the way they act, because in traditional economy, the more the state involves, the worse the economy. So they are not a good administrator. So I believe if they step aside and allow this crypto environment, it could be a healthier one for everyone. So yeah, that's a really good point. Sure. Yeah. Okay. You go ahead. Mm-hmm. Yeah. Yeah. Actually, I was going to add to the question before. The way to go is like countries adopting cryptocurrencies as well, or creating their own crypto for their environment. Basically that. So changing the fiat into a digital money of the country, or crypto, not necessarily Bitcoin or Ethereum, their own crypto, as I was mentioning, like Venezuela is trying to accomplish, but hopefully in a better, more positive way, adopting a cryptocurrency. For sure, that's the way to go, to collect taxes, to, as you mentioned, build roads, everything. I mean, build the economy. But the economy is shifting from that model to the new one. But right now, governments are seeing that as a threat instead of opportunity to, okay, let's change all from scratch and let me help you, right? Instead of killing the... I'm talking about the good entrepreneurs, not the scammers. So yeah, that will be the path to go. Countries adopting or creating their own cryptocurrencies within the blockchain, even a faster one. Without?
Money. So similar to state governments, will countries become like that they won't have the capability to print the money, but they can still collect taxes and provide all facilities? Is that how the future will look like?
Sorry, can you repeat the question?
So today, state government, California state government, it collects taxes, and in turn, it provides us a lot of facilities. In future, will countries stop having the ability to print money, use crypto, Bitcoin, Ethereum, whatever, and collect taxes in that and provide facilities, but do not have the ability to just print their own currency? Is that how the future will look like?
I mean, when we start seeing, that's a good question. When we start seeing, I will repeat the question, but when you start seeing countries creating their own blockchain and their own cryptocurrency, they will have a demand, supply demand, right? And that will have a value under time. I guess down the road, but that's still way to go, should be like that. I mean, it should be why you need to print money if you have a super technology supporting the system, right? That's my view. I might be wrong, but why not? Yeah.
So that's not very encouraging for me to hear. I almost feel I should leave. Why are we here in this conference if at the end of the day, all we recognize is instead of money, we go Bitcoin? Like, there is no novelty coming out to me as to why this craze is there for ICO and Bitcoin and everything. If at the end of the day, we recognize that we remove fiat and change it to some other digital, and the government still works, and the taxes still get collected, and everyone is happy. So this is just a noise, and things will settle down.
Yeah, I mean, obviously, I'm up for the technology. I mean, that's my point of view. I might be wrong, but I believe if the technology is great and you can get better, I'm not promoting or doing only ICO way only. I'm a huge believer in the blockchain per se. So what happens to that could be fascinating, because not only money, I mean, that was one example, but pretty much all the industries will be affected by blockchain. Logistic, retail, supply chain, IoT, obviously all industries will be transformed, and government has to be in the same direction, because that will be really complicated, seeing the government, no, I want to keep fiat, that doesn't work, and the whole world is shifting. So that's my point of view. I might be wrong. I'm not only encouraging crypto or Bitcoin per se. I just mentioned Bitcoin because it was the first example. That's it. I know it's not perfect, so yeah.
Your question about the State Department. In the United States, we have a lot of resources that we can expend, expel, and do whatever we want. We have large federal departments to enforce those. In a lot of other countries, they don't have those things. So they're strapped on those resources. So that's why some of the first forms of digital trade was cell phone minutes they would use, and likewise. So it's not that the United States government will all suddenly disappear. It's that new governments can form using the blockchain and using these currencies. New services and otherwise can be enforced using smart contracts. So if you don't have a SEC, you could kind of build one, so to speak, on top of the blockchain. And that allows a new creation of a new kind of government. So the innovations in blockchain, this is partly why the US is against a lot of this stuff. It's not necessarily going to happen here. And you're not really seeing it happen here. You're seeing it happen everywhere else. So.
Exactly, yeah, that's a good point what you're mentioning, because that's pretty much it. I mean, use the technology to totally transform the way the government reacts within the smart contract, etc. That will be it, yeah. It's a good point.
Okay, great.
Thank you.
Thank you very much. All right, so I did want to comment that people really found the dialogue with the speaker and the SEC very helpful and interactive in terms of understanding the problems that U.S. government faces in analyzing this brand new marketplace. So we had an idea, which is at lunchtime, we are going to host a continuation of this at the Crypterium booth as a dialogue. Unfortunately, Nadia cannot stay. However, our next speaker, who's experienced in that, has agreed to lead an informal discussion. So you can continue the dialogue at the Crypterium booth over lunch. Right, next we have Ted Watts from Forbes Technology talking about blockchain as a service, and he'll speak until 10:30, and then we'll be back on track for our investor panel. Thank you.
Hello, everyone. I'm the ICO bouncer. All right. See if I can get this to work. Do I have to use my left hand? Guys, there we go. In case you did not know this, this is a disclaimer. Investing is risky. Do not say that Ted said investing is not risky. Investing is risky, and you will and most likely lose money. Okay, on that good note, Let's have a video. Thank you. Thanks, Mom. Thank you. Okay. My name is Ted Waz. I'm the CEO of a company called the Opinion Economy, and I have absolutely no idea what I'm talking about. I attended Harvard Medical School, where I'm focused on informatics. I am actually the co-founder of the Harvard Global Blockchain Alliance. I'm a member of the Forbes Technology Council, and I do all kinds of stuff. I've been a Fortune 50 CXO 3 times, and I've worked in small little startups and all kinds of middle businesses. So how many people are here really just because you want to make a boatload of money from an ICO? Really, you're in the wrong room. Nobody here wants to make any money from an ICO. You are so full of, there you go. All right, you guys see me later. I've got t-shirts for you. They're not mine. It's the Stroke and Token t-shirts. You're going to love them. So true story. I've been doing this stuff for like 85 days, just talking nonstop. And so I said, you know what? Last night, I am going to go unwind. So being the bright Harvard man that I am, I walked over to the cannabis token and the Stroke and token. I said, hey, where's a fun place to party? And they're like, we don't know, man. We're behind a computer all the time. We need some sleep. All right, past the hype of cryptocurrency. Now that's not to say that cryptocurrency and crypto assets and crypto securities or crypto economics have value. But there is the underlying technology of blockchain, and there is importance there. And one of our speakers over here asked, why are we here? Actually, I'm going to say that emphatically. Why the hell are we here if there's no value, right? Yes. Okay. Well, we're here because somewhere along the line in our economic systems, we created data waste. We took well-intentioned middle people and said, let's accelerate the process. Let's make it easier for people. Let's help companies earn money. Let's bolster the economy. And then those of us in the middle, I've been in the middle sometimes, we said, you know, those guys can't do shit without me. I'm going to raise my price. I'm going to add steps. I'm going to use rolled throughput yield, which is going to cause my value to go up, cost them more on this side, and so what if the little people pay more? And that's mid-chain inflation. And then we have security issues. How many people here think that blockchain is an automatic pass for perfect security because there's cryptography? Anyone? You do not believe that because you read the news. Come on. You shouldn't read it. So what we have in our systems across the world, we have false data. We have consumer data slavery. How many people here got really upset when they heard that the NSA could be tracking all of your personal telephone calls? Are you guys sleeping? I showed a video. You should all be awake. All right, everybody here got pissed off for about 8 minutes. And then they downloaded a new app and clicked away all your rights. You think I'm kidding. And I know this because my brother actually designed the net. He was the chief cryptologist for the Department of the Navy for President Clinton and for the NSA. And he designed the remote operations center that gathers all that information for the NSA that they couldn't possibly look at. But Google, Facebook, they're like, hey, we're going to give you this free access to tell us that you tried Coke Zero and you thought it was awesome. And I'm going to click away all my civil liberties, and you've done that. And then there's revenue waste. So this is a typical workflow. This is what happens. You get a group on one side for commerce and advertising and research, and on the other side you have consumers and respondents, and in the middle you have all of these companies, and you have fraud, and you have AI bots, and you have click farms. And all of this right now is obfuscated. But what blockchain, and the reason we're here for blockchain, is because this is possible. You're able to get rid of that and replace it with this. It is an elegant, streamlined system. Now, do not think for a moment that if I have blockchain, my world is all sunshine and rainbows. Because you can't really transact at speed in blockchain. You need to have this part of an enterprise solution. The result of all of this mess in the middle is we've created this issue with integrity. We have this data integrity issue. We have this malaise that just says, what are we going to do? I can't really change the big systems. So I might as well just click away my rights. Might as well just, do whatever. It's okay. Is that all right? Anybody here want to do that? I hope not, because you're all here. You people have unmet needs, and I've conducted a survey to find out what they are. And these are they. You guys find the experiences today complex. You guys want to share feedback with others, and you want to share it with the brands or the affiliate groups with which you are connected. You would like to own your own profile, but it's got to be simple, because you can own your own profile on Facebook. It's just damn hard to do it. You want to be able to get a piece of the action for your data. Well, you don't know that yet, but I'm here to tell you, you want to get paid for your data. Anybody here want to get paid for your data? Okay, I'm obviously not speaking the right language, so does anybody here want to get paid for your data? All right, I'm gonna try this one more time, and then I'm going to Draper University and talk Fintech stuff. Does anybody here want to get paid for your data? Yes. Thank you. Yes, you do. Would you like to set your rate in a free market economy because you have experiences that are more unique than the person next to you? Yes. All right. So now we have a perfect match. We have people who have experiences and we have brands and affiliates that have questions. We had a colleague here yesterday who talked about lending. It's a great example of what to do with blockchain. So we combine these things. And how do we do it? We use the blockchain as a service as the capability. Okay, thank you. So this is a technology matrix overview, and there's a couple of things that I want to talk about very quickly. One is security, data in motion. This is new commercially available capability. I'm not part of this company, but it's a company called Red Lambda. It's the same capability that the NSA has when they're looking at securing things. It's really phenomenal. You want to be taking a look at edge services, from the public side to the cloud to enterprise services. This is what it looks like. It's not two guys in a garage. This right here is 12 man-years of work. Or if you're in Toronto, it's 12 crypto chicks years of work. There is a need for standards, and the Blockchain Engineering Council has created a series of standards around interoperability and IEEE 42010. When you're investing, look for proprietary technology, look for thought leadership, look for the key partnerships that people are developing, and is there an early advantage? And it is a clear advantage. Build, broker, eliminate, and transform. Nobody really likes a disruptor when you're investing. Some considerations, I'll make this available to anybody who wants it afterwards. The new value proposition, focus on real growth. And remember, if you don't know what GDPR is, you're in real trouble. It's a European regulation that's going to impact any member of the European Union globally, wherever they are, including using your blockchain. And this is what it's like transacting blockchain by itself. Make sure that you're prepared. Thank you very much, everybody. I really appreciate it.
The investor panel, and we have a great group of investors. We actually added a few investors and we added a few chairs. So you're going to hear from SC Moadi, and you're also going to hear from Mighty Capital, and we also added Curtis Feeney from Voyager Capital, which is a traditional VC firm in Silicon Valley. So you'll get a chance to hear from traditional investors as well as investors in the ICO space and hear both perspectives, pro and con, about investing in these marketplaces.
Hello. Nice. Do you hear me? So my name is Pavel. I run an early stage venture fund here in San Francisco, and we have this nice panel. So I guess my role here is just make sure you ask provocative questions and make sure you respond in a timely manner, okay? So I'm not gonna interfere too much with you. So what I suggest we do is just do a 30-second introduction about each of you, and maybe say more about what's your current focus, what you're looking for. Okay. So I'll start. I'm Pavel Cherkashin. I run GVA Capital and also Mindrock Capital. So these are management companies focusing on, if you can call this traditional VC, like self-driving cars and AI, but recently joining the blockchain space as well.
Hi, Stan Fung. I'm Managing Director with Drum Tower Ventures. I was here yesterday too. We are actually based in China. I live in Beijing, but our fund is based in Shanghai, so we cover companies. I've been a venture capitalist in the US, on the East Coast, for almost 15 years before I moved back to China and started getting more venture capital investment. And our goal is to invest in global startups from innovation hubs anywhere in the world to help them expand their business. And so I have a session after lunch to explain further about what this is all about. So welcome to come back, so I won't spend time here. But we target on TMT space, AI, big data, IoT, and then start to learn about blockchain. But a few of our companies actually are already doing functional software. They can easily add blockchain to their platform, but we are not sure we will do that yet. So my role here is to really learn more and see if we can incorporate those thinkings into our portfolio.
Hello, my name is Chance Du. I'm the founding partner of Coefficient Ventures. I'm being involved in the cryptocurrency since 2017 January. We are a crypto-only fund, and we only invest in blockchain ecosystem. Our portfolio including Filecoin, Radar Network, and OpenZipling, and Orbit, Sounder token, a bunch of infrastructure-focused tokens. Also, we do a lot of incubation and advisory. I personal advisor board of 3 projects, where the first investor and advisor for Tomo Chain, which is founded by the previous founder of LIM, which is top 15 cryptocurrency worldwide. And also I'm an advisor for Haven token and IoTex, which is IoT infrastructure token. And as we can see from the conference, right now it's in a bear market for this whole cryptocurrency, so the room is not very crowded. But I think it's really right timing for the true believers for this cryptocurrency revolution to builders, and they build really good products in this not very hyped environment. And I think in this year, the whole landscape will be more reasonable cap, that it's not like the last year, like almost every project, they're just value themselves like 30 million or 50 million in seconds from air, from nothing. Then I think this year it's gonna be a little bit tough for raise money. But I also think that projects really build values for this ecosystem, gonna still have no trouble to raise money, and also gonna doing a great job. Thank you.
All right, good morning, everyone. So today I'm the controversy token because we don't invest in ICOs or crypto, so I will be bringing a bit of controversy to this panel. I'm Esty Moadi. I run Mighty Capital, which is a venture firm that invests in companies that have already reached some level of traction. What we offer to them is something really unique, which is access to hundreds of thousands of early adopters that are potential customers and potential hires.
And I'm Curtis Feeney with Silicon Valley Data Capital. I used to have a doctor who went to Harvard Med School. He was nothing like this other doctor that we just saw. And I'm thinking that maybe that was a good thing. And what we do is invest in early stage enterprise software aimed at the Fortune 1000, because they are all trying to respond to what's Google and Amazon and the rest of the post-internet world doing to us with our legacy systems, and blockchain's an important part of that. And we've had a half dozen investments that were acquired by Fortune 100 companies for their data analytics platforms, machine learning, data science, and data science consultancies. And these have given us a half dozen Fortune 50 entrees into what are these enterprises looking for in data science and data analytics and blockchain. And it's particularly interesting in a couple of areas like the insurance industry or the utility industry, any industry that has centralized command and control legacy architecture that could then be, over time, moved into a new architecture where you distribute the intelligence, the encryption, the transparency out to the edges. So we're very interested in that and invest in, as I said, early stage and A-round deals.
Great. I think we have a very good mix here of crypto versus traditional venture investors. So my first question to you, do you think that venture assets are on fire now with what's going on in terms of the changing business model and how startup founders raise money, or you think we're safe? I mean, we meaning the venture guys are safe.
Let me just start with some comments on it. It's an interesting question. I've been doing venture capital since 1990. When I first joined the industry, there were maybe 4,000 people nationwide in the US, and it just nothing existing in overseas countries. And it's now global industry, probably 50,000 people doing it, 10 times more capital, chasing deal ideas that probably have gone up maybe double or 3 times. So if you look at the ratio, there are more capital chasing similar ideas now globally. So I think there's really limitations in terms of when we look at deals, how you pick up the outstanding ideas for the next wave of big companies is tougher. It's tougher to do. Now, luckily, in the same time, the technology-based and the user-based, the entrepreneurship programs around the world is expanding. So we've got more sources to source ideas. So that's why we expand, at least myself personally, instead of just doing US-based venture capital, I went back to China, I originally from Hong Kong. So I moved back and started to create the idea of global startup venture fund.
I'm sorry to interrupt you, but still, the answer is the life easier or harder for venture investors now with the crypto world emerging?
Well, it's always hard, never easy. It just makes the selection process a lot more difficult.
Okay.
So because it's a new area, so.
So I'll
you go first.
I'll say that venture capital is an industry that's completely closed off, completely elitist, and so it's absolutely not safe, and thank God. I think it's being disrupted in many, many ways. The funds that I see really at risks right now are the funds that are huge and providing essentially dumb money to their companies, because they're accountable for so much returns from their investors, and they add so little value to their portfolio companies that it's going to be very difficult for them to generate the return that they're on the hook for. I think that they're at risk, particularly from some of the blockchain stuff, although I'll let my obviously brilliant colleague right here talk about that more. I also think that there's a lot of room for disruption in the venture community coming from a new type of ecosystem, and blockchain is one of them. The one we're creating with Mighty Capital is also one of them, which is a lot more about expertise, connection, ecosystem, networks, than it is just about money.
So you also think that it's going to be harder for venture investors?
I think for the incumbents, the kind of old boys network, closed club, we have money and we're going to kind of make our own decision in our small little, ivory chamber. Yes.
Okay. Chance?
I think before I all in blockchain, actually, I was an angel investor for equity investing in AI and machine learning, and I do some blockchain equity investing as well. And also right now, we're our fund, Coefficient Ventures, we focus on the whole blockchain ecosystem, which means we invest in token, a majority in token, and also we invest in some in the equity side. And I think it's a good calculation actually. For token fund, actually, most of funds are focused like the access period is like from 1 to 3 years. So compared to traditional venture capital, which is 6 or like even like 10 years exit period. It's very short-term focused. I think venture capital still have a lot of rooms here because they're very used to like long-term focused. So like some projects that maybe you cannot see the progress, short term, may be very fit for with venture capital money. And but for crypto also very good because they give a lot of pressure for projects. You have to deliver what you promised. If you didn't, then investors got steal your tokens.
So
they have very high.
You're saying it's more competition and it's good, right?
Yeah, I think it's good. Who do the good job? Who remains in this game?
Okay.
I do want to agree with a lot of comments that were made here, but if any of you have read the book Nudge by Richard Thaler, he gives a pretty good algorithm for entrepreneurs to think about how to sort through the many choices you have to get money. You can go ICO, you can go crowdsourcing, Kickstarter type of money, you can go family and friends, you can go venture capital, and there's a range. And I think the intelligent thing to do is study the ranges, look at the different sources of money, and then you really want to get educated enough so that you can lay out and this is right out of the Nobel Prize winning economics of theory, that the optimum way to do it is lay out about 100% of the tasks you're going to pursue to make your decision, and then really go through a process of looking at 3/8 of that, about 37, 38%, somewhere in there, in that range. And once you've done that, then you have enough data sets that the next best deal you find, whether you can recapture one of the ones you've already looked at or the next one, is the one you should statistically take, which is an interesting approach. And I think that makes it easier for the entrepreneurs, necessarily takes away some optionality from the VCs. So by statistics, it does limit some of our choices, the deals that we either never see or that we want to see. So
you're saying that the best VCs will become even better, the worst VCs will die?
There's a bell curve on every group of people. The good ones are going to be fine.
Okay, great. But let's look at it from the entrepreneur standpoint, right? I completely agree. It's a closed club now. It's all driven by a small group of people, lack of liquidity. So and I have more people hating me on Facebook than loving me, right? For this reason, you probably have the same experience. So does it open new opportunity for the entrepreneurs? Is it going to change the way they approach VCs? Are they going to just say, screw you, I'm going to get funding from the crowd? What do you think? Or they still need us?
Well, I'll just take a quick shot at that. I do think entrepreneurs should do a sort of an impedance mismatch kind of frequency analysis on the type of money they need or want and the type of business they are. So the fact is, a lot of entrepreneurs are probably better off not taking venture because they are not in a business sector or a particular product sector that will allow them to achieve explosive growth. And early stage venture is one of the most important things is looking for is explosive growth. So to the extent that either the timing's not right or the team resources are not really interested in the 150% commit to get explosive growth, then it's probably better to not go for VC. And then I do think that there's easily a half dozen different choices of money that they should explore, analyze, and one good, and some people like it, some people don't, but I think a very good model to look at is how Y Combinator looks at deals, and they sort of have gone to almost one model. They come in and do safe notes and.
I'm sorry, may I ask Stan about this, and maybe Chance, about the international reach? I mean, now most of the venture business is here around Palo Alto, right? Do you now see more opportunity for global startups, more access to capital for them or not?
Absolutely. I mean, the key part of all that, so I'll come back as a more detailed discussion in the afternoon, but one of the major ideas about TMT, at least on that side, is information sharing is so common now, it still feels like, in the case of blockchain, right? It's now almost instant that the knowledge base and the development of blockchain is global the first day. And so you can, as a result, see the startup coming from anywhere. About half of this room originating from overseas or travel from overseas for this conference. So as a result, you will create innovation from Russia, from Israel, from Beijing, from here, from Boston. And our job as investors is to try to find the top 3 firms in this emerging space anywhere. They can be global companies. And so you have to go source them.
I think for blockchain specifically, it's very distributed. So basically, we made 25 investments, but I think we only take in-person meeting for maybe 20 or 30% of the startups, which means like 60 or 70, I just get a phone call and we make the decisions, do the investments. Because blockchain enables this transparency. So when we look at the team, we look at the founder, the teams, and either like I know them before, because in blockchain actually, especially the good blockchain engineer developer is a very small community. If you have this kind of a good quality engineer team, we can know one person, then we can ask for other people what the quality looks like, their products, and also if they have tested already, if they have good community engagement, then all you can tell actually remotely. You don't need to meet in person, like just to take a meeting, fly to Europe. That's actually how blockchain enabled. It's a little bit different with traditional venture capital. So I think it's actually good for global startups. As we know, before in venture capital, Silicon Valley is kind of in the hub, right? Not meaning all the startups founders could come to Silicon Valley, get the money from Silicon Valley. But right now, you could be anywhere in the world. You could get the top tier venture capital money for blockchain fund like Pollution Capital. And also Andrey said that if you are good enough, they can just fund you. And as us also, we're searching deal. Even I'm personally based in San Francisco, but I accept every deal from everywhere. So just focusing on products, do great tech, build tech, very good products. I think they good money and smart money can fund you.
Thank you, Chance.
So if you're going to get venture money, I think you need to choose your poison. There are sort of 3 kinds of investors, venture investors. And I use terms that if you play games, you'll be familiar. You have whales, dolphins, and minnows. And in the world of gaming, the whales are the ones that, as a game developer, make you all your money. They are the ones who buy the shiny armor and so on. And so you do whatever it is that they want you to do. The dolphins are the ones that are going to tell you, hey, you should really play Candy Crush, right? They're your social butterflies. And the minnows, they don't do much for you. They're just here to be entertained. Well, in the world of investors, you have exactly the same thing. You have whales who are going to write you a huge check, and they're going to expect that then they own you, and you're going to have to do whatever it is that they want you to do. You have dolphins who are your social butterflies, so your success is their success. I like to think we're one of them. They're going to really try to get you to your destination. And then you have the minnows, which can't do much for you, but are all rooting for you. And when we look at opportunities in blockchain and crypto, we see that they can be effective in the first 2, in the whales category and in the dolphin category. The whales category because the scale of investment that can come from an ICO or such can disrupt the ecosystem of whale investors very effectively because, frankly, that huge check comes with very limited value. And then investors like Grace can also disrupt or add to the dolphin ecosystem because of the connections and the network and the vision that they have. And so by kind of pointing you in the right direction, they can make you successful.
And then there are gull investors, you know this? Where, those who fly on top of you, they scream shit and fly away. I'm sorry. By the way, if you have any questions in the meantime, raise your hand so that I know that I'm not the only one interested in the audience. But I'll keep asking until I see somebody with your hand.
Can I add a comment? One of the things I've not listened for the last day and a half and discussed in the audience is when I first got involved in venture capital business, my first boss told me there are 3 rules to make good investments. One is how much money can you make, what is the downside protection, and how do you get out of investments. And so as an entrepreneur, as investors, And it's always forgotten that automatically you just think that when you invest your seed money or your angel money, you get money back somehow. But it's not easy. It's not obvious. It's very difficult, in fact, tough to do. So over ICO allow you to have a short-term return because the ICO being trade, give you some immediate return. But if you look at the traditional model, exit is a difficult part of an investment. So as an entrepreneur, I encourage you to think about in the business model, in the business development, how you build a model that is attractive to any IPO potential anywhere in the world, right? It can be London, it can be Hong Kong, it can be NASDAQ if you can, or New York. But you can also look at M&A, because there are only 3 options in the exit. One is to get out for IPO, you sold the business, or you die. Or you're living that for a long, long time and become a lifestyle business, not by choice. And so which options do you want to be? And rethink through the process on how to get there. And now, given this said, you can't do it through computers. It's all done by people. And this is how traditional VC come into play, because we have done it many times. We engineer exit, we structure a business model, we structure results as a way to create exits for you. And this is how we add value in the end. The rest is all just easier.
Yeah, blockchain potentially was supposed or is supposed to solve the biggest problem of VC of liquidity, right? And I think it's a double-ended sword because, for example, I don't invest in ICOs anymore because I say, why do I invest now with all the risks if I can wait for 6 months and see if you come up with a product, and I can always buy at a market price through the tokens, right? I don't know, what's your perspective? Chance, you're doing a lot of ICOs, right?
Yeah, we only do ICOs, and we do a little bit equity, which is tier 1, top tier worldwide equity deals in the blockchain space. So we look at it different ways. So actually, we're focused on pre-ICOs. Why? It's similar as an early stage venture capital fund. Like we want to be the first investor of the fund startups. I think for one firm, if you want to establish your judgment, your brand, the only way that we think is the right thing to do is to prove your judgment is right. Like when we backed the Tomocoin, nobody's investing, but I look at the founder. He's have a good track record before. He built a he built a 1 billion top coin called name before, so he created a new second project called Tomo. So I think this entrepreneur have a good traction, and second, he only raised a very small cap, which is 8 million in the bond market, which is very, very tiny, and also he built the infrastructure for the scalability solution for Ethereum.
But doesn't this look like a find a bigger fool kind of strategy? You invest, you pump it up, and then the general public or somebody else has to buy it at a higher price.
No, I think for us, for some projects we hold logic position. We're not gonna exit very soon. For one project we're common in crypto fund is like the usually take principal out first. So that's very different with venture capital fund. You basically wait for 7 years, maybe have a little bit chance to win, either go over 100 or 0. But crypto actually you could get most of the principal out first, and then you get the profit there, and also you can wait till 100 times. That's why right now we spend a lot of time to help projects. We have large positions, help them build global communities and connect with exchanges, more and more exchanges, more liquidities, and also just help whatever they need. So I think that's also kind of like added value.
May I ask a question to our VC friends? I see their faces very skeptical. What will it take for you to not only to invest in a blockchain startup, but to beg to get into it, like you would do in your best deal? What would be the parameters of a blockchain startup that you would want to do the token participation rather than traditional equity participation?
We've got a couple of companies in our portfolio that are looking to do ICOs right now, and so it's an overlap to your question and what we're thinking about.
No, that's again find a bigger fool. You tell them go out and find other investors.
It's if we do it. Yeah, if we do it, do we end up strictly getting speculative money with no purpose, or is there a utility to the token that is going to have value in it intrinsically going forward? And that's a big part of our thinking about the process. It is very interesting to think about bringing in the capital, but given that these companies have significant revenues, significant global footprints, we do not want to strap them with something that might become an anchor if it doesn't develop utility. So I think our focus on that is strictly on, would we do it with a utility end game that we believe in? And then back to the question of investing in blockchain, we believe blockchain, as it improves in terms of latency, which it inevitably will, and that's been mentioned a couple of times today, the latency issues. As it improves in latency and becomes more and more established as an architecture of choice for transparency, distributed, encrypted transactions at the edge, we believe it's going to be important in many industries. And one of the most important things we're looking for to make that investment is the quality of the team and the quality of the technology.
Yeah, this is general bullshit. We all say this. Give us something
But-
more.
but- but
give
my
us
bullshit's
the
better than your
idea
bullshit.
that you're looking for now, something
I'll
that you
help you
cannot
out.
find.
No, I have good bullshit, so it's good bullshit though.
I'll help you out. Actually, I'm a computer science major from UCLA, so I'm not novice, not a technical person. I lived through all 5 generations. I worked with IBM, so mainframe to distributed to desktop to mobile. Now the 5G generation we are in, right? So we are very smart. We just create the same software 5 times over in 5 generations of platform. Now, it does make a difference because every time you go from one platform to another, there's a reason why you move, right? So if I take the recent example that most of you are familiar with, so go from Oracle to SaaS, right? There's a lot of reasons, right? You know the reasons. If you don't, explore it. Now, go from SaaS to blockchain, there should be reasons. So for us, we look at the reason why a business is attractive to begin with is to address a market problem. But if you're going to use blockchain, tell me the reason why blockchain should be incorporated now to create a differentiation from SaaS. If you can convince us why it should be incorporated, then you should. But if it's just because of hyping, there's not the time. So going back to the comment I made earlier, because this is 1991 for internet, and so as an investor, I'd rather wait till 1994, 1995. The internet platform is more established, more concretely designed, all the function available before I incorporate into it, because otherwise you will redo it again in 3 years.
Are you saying that nothing will excite you now? I mean, come on.
The blockchain?
Say.
No.
Somebody comes to you and says, I'll build Facebook on blockchain or Uber.
You see, what happened is there's also another dimension. One is the cost-benefit improvement over the last generation platform. That's obvious, right? But the other interesting thing is every time there's a new platform, there's always new application you can create from it that you cannot do before. Now, without mobile device, there'll be no Uber, right? There'll be no Airbnb. Without the inflection point of crowd in 2004, there will not be a Facebook. Or the people lost because there's not enough scale. So I think there are some unique type of applications you can now do that you cannot do before with blockchain technologies. Now, I'm not smart enough to know what that is, and that's why we count you guys to create it and find me.
Thank you.
Find us.
But to your point, we believe right now that this is the MySpace era of the space, and we're actually waiting for the next wave, which is, we hope, going to be the Facebook, LinkedIn, Twitter, and so on era. So for us, just because of how we invest and the stage we invest in, it's a little bit early. Reasons we believe that is lots of signals such as poor performance, security, and privacy, and fraud issues. So in terms of when we invest, because of our thesis, which is a relatively later stage, we're going to wait for the next wave of innovation to come before we place our investments. Now, when that comes, will we invest in an ICO instrument? It's very unlikely. We don't even do safes, Curtis, sorry. We form long-term relationships. We invest in traditional notes and equity rounds. So it's unlikely that we'll do an ICO investment.
And
do want to mention there's a couple of spaces that we've taken a hard look at and seen some very good companies that had things changed a little bit we might have invested in. And one was in the AML space for blockchain.
Email?
So not email, but anti-money laundering.
AML.
So
Okay.
that's an interesting enterprise view that the large banks in the world are very interested in, and a company called Blockseer was very good in that space. We were talking to them. They ended up getting acquired and going into a public data mining or crypto mining company. And the other one, BitGo, which does the triple authentication, so these infrastructure plays that are going to help arm the blockchain for enterprise are very interesting to us.
So you're thinking really we are in like 1992 and it's all about building infrastructure first before moving into applications, is that right? May I ask you a very quick question because we're running out of time? Yeah, just last question before we turn to the audience for the questions. Just very quickly, if you have a choice, equity, tokens, or a mix, what would you do? What's your ideal deal structure?
Voting share equity.
80% tokens, 20% equity.
So we do just equity.
It's just equity, right?
Equity.
Equity. Okay. Good.
We're owning crypto funds, so.
So you can see we have a great mix of the whole spectrum of venture investors here on the panel. So it's a great chance for you to ask your questions. Yeah, raise your hands and take the mic, okay?
So you mentioned 3 forms of exiting, but the blockchain actually performs a 4th form of a potential value. And that is if a service is rendered or otherwise, similar to a blue chip stock, you can get your investments back faster, and actually it can contribute to you wanting to stay in the blockchain longer. That's the whole entire incentive of a token, theoretically. Now, there's not a good implementation of this yet, but that's why investors want to invest. So what's your comments on
What's your question?
I'm curious, like you said there's 3 forms of investment, but it seems like you're missing why people are investing in tokens to begin with. It is partially to get their money back out. And there's not a lot of tokens right now that are paying investors back out in the revenues that they're receiving. But if you have a token that is that something that you would invest in, theoretically?
I think it's just that you need to be a good investor and smart investor to pick the projects that actually could get your money back. From now on, all the investments we invested, we have a bit. We'll be able to make money in all the investments. Because before we launch our fund, actually I spent almost 1 year to dig into study how blockchain works and what's the fundamental of it, what's the value of it. Then makes me, I think, have the ability to pick the projects that actually have something there that people wanting to buy. Not like those like shitty coins that have no value, just hyped and very good at marketing and sell their tokens and know nothing about what it is.
More questions? Hey, there's a question over there. Yeah, go ahead. Where's the microphone then?
Yeah, hi there. So.
Oh, I'm sorry. You'll go next. Yeah, I'm sorry. Go ahead.
Okay, so there was an interesting thing that came up at the discussion that was the quality of tech. We all know that in the blockchain, the most important thing is the underlying technology, especially when you're spanning ICOs through existing platforms like Ethereum Neo. If you don't do it right, you can lose that money right away. There's a lot of potential security threats with that. So my question is that how do you judge the underlying technology when you invest in a company that's spanning ICOs?
Welcome you guys to listen.
Because especially with the culture that's spanning these days in the Silicon Valley, fake it till you make it.
Actually, I have a speech this afternoon. I'm going to talk about what's the right strategy to raise money in the bearish market and how we, as a crypto fund, look at blockchain projects. What's the criteria? I think it's a lot different with venture capital look at deals.
Any venture perspective on that? Any particular signals that you look at for best blockchain technology?
Actually,
there was a question over there. If you...
I have a question. Oh, mic's coming.
Thank you. I was talking to a venture capitalist mentor of mine for about 7-10 years now, just last week, and I asked him flat out what he thought of blockchain, and he came back and told me, I don't care. I just look at it as plumbing as much as Hadoop. And what Hadoop did for big data, we see blockchain being able to do for other things, but that's the extent to which we're excited. Do you share that assessment? Do you see blockchain as purely plumbing?
Let me explain what that is. So internet was created just by having a pipe, right? So along the way, all the application that got built over it has in it all the function of securities and ledgers. So as time developed and individual firms start to build their own, the next generation, which is what we are, distributed network, data sharing on a distributed platform, all this function will be extracted out to another layer above the internet pipes. And this is what blockchain is all about. And it's not 100% completed. So Satoshi was smart enough to create these two functions, now the ledger and smart contract. But there, as you all know, there are probably 10 other things we need to finish the layer above which we now have vertical apps. So we're at this stage right now. The other piping that is needed for that layer need to be structured before it can now rebuild the application. So it's not just piping, it's really functional layer above the infrastructure layer.
I think it's right now, we look at the way that right now I think is the stage of infrastructure. That's why a lot of crypto funds actually focus on majority in infrastructure. What infrastructure mean? That means they build the infrastructure for blockchain industry. So if you're doing an application in this stage, maybe a little bit tough to raise money. I mean, the application have different scenarios. The applications that are born as a blockchain project, like Augur, prediction market, that's never existed before this model. Only blockchain could empower it. And but a lot of like enterprise companies trying to tokenize their models. I would say that is next stage of application. I think that will go after the infrastructure. So I think this because right now our infrastructure is very weak in terms of security, scalability. It didn't work yet. One app could shut it down, or all Ethereum network down. So we just, that's why I make it right timing for building the infrastructure.
Next question, please.
So you guys have talked a lot about the technology and how early it is and how undeveloped it is, and you don't want to invest because of that. I wonder your opinion on what I see as the fundamental use case, which is a new kind of money. And if it's a new kind of money, then if it replaces fiat currencies, then you'd be losing money to ever sell, or not maybe ever, but to sell your Bitcoin back for fiat currency.
What's the question?
It's not very well formulated, but are you looking at these as investments that you'll sell back for dollars later, or as owning a chunk of what humans will use as money in the future?
Let me translate that. If I understand correctly, the question was, rather than do the hard work of doing venture investment and waiting for a couple of years, why don't just buy Bitcoin and hold them for 5 years and then you make a fortune on just growth of it?
I would say that's I was thinking like 1 year ago too. But when I involved lots of ICOs, I realized that's not the same scenarios. When you're investing ICO for our fund, we invest in ICO actually 40x within few months. How Bitcoin could 40x within few months. So once you understand, involved it deeply, and really really do a lot of practice, you could know what's the secret inside that. But you do have a very good ability to pick right ICOs. Otherwise, you cannot. Most of funds, crypto funds, cannot beat Bitcoin or Ethereum increase rate actually.
Thank you very much. I think we have to wrap up here. Thank you very much for great discussion, guys. And sorry if I was too hard on you.
Thank you. And before the speakers leave, I just want to say, again, thank you to our general sponsor, Crypterium, because if they had not generously supported this event, which is extremely challenging and expensive to produce a large conference, we could never have done it. We really appreciate their help and support, and they, again, are a leader in tokens, so we hope you will go meet them at their booth later and learn more, and also we'll have our lunch discussion group at their booth to talk about topics in the industry. Okay, thank you for our panel, and next we have a short demo by Kim Nguyen. You heard from her yesterday on a longer talk. She's going to do her, how many, 4 minutes or 5 minutes? She's going to do 5 minutes now, and then right after that, we'll go into our next short speaker, and then we'll have another talk. Okay, thank you.
Okay, good morning, everyone. Thank you so much. Again, it's an honor to be here and speak with you again. For all those who've been with me yesterday, thank you for coming back. It's just wonderful. AI, blockchain, and healthcare in 5 minutes. Okay, let's go. I know we can do it. Okay, so DMed.ai actually produces we're building a decentralized artificial intelligence platform that is transforming healthcare. Problems with healthcare, 3 major problems with healthcare. The biggest problem is the high cost, more than $7 trillion globally. Now, I talked a bit about my journey yesterday. I'm not going to repeat again, except to say that we are in a unique position to actually make this happen from all my personal experience in the industry. I've pretty much been with very impacted projects in the past, and with this project, we are literally going to combine AI blockchain to really impact healthcare. DMed is my focus. DMed has everything that I want to do to really transform healthcare. We have, just so that you know, we don't just come up with a concept and talk with you here today. We've been working on this for many years. The company was formed this year because we know that we need to speak with the community. We know that we need everybody involved, and the project is well underway and absolutely operational. Next thing, DMed solution. So what's the solution? I mentioned already artificial intelligence, blockchain. We build a decentralized platform that has very unique tools that empower AI development for healthcare. Now, showed this yesterday already. This is one of the user case in radiology. It's been used, it's operational, and it is actually reading the CT scan of the head as we speak, and it produced the report just like a radiologist. The comparison is obvious. And you can see the amazing, amazing performance. AI performance continue to go up and up as you share the data. So with a lot of data, AI software just get better and better. Now, this is the DMed platform. These are the features of the DMed platform that we are offering. And much of that is in the centralized fashion, and we are moving to decentralize, starting with the exchange. We can talk about all of this later, but a few things that people asked me yesterday, I want to emphasize that we literally solved the issue as far as privacy, HIPAA compliance, etc., that many of you may have heard of, and it allows for the interchange and the close collaboration and working relationship between many parties in the healthcare industry. Now, not just radiology, the platform allows the work to be done for many other disciplines of medicine: pathology, dermatology, cardiology, ophthalmology, EMR, genetics, etc. Now, the DMed.ai community, we have literally expert in healthcare, expert in artificial intelligence, and many specialists expert in blockchain as well. We also, I'm here because I would like you to spread the words. If you love healthcare, if you care about the future of healthcare for yourself or your loved ones, you need to really get the words out and get others to get involved with AI, blockchain to really make a difference in healthcare. That people also came to me and they asked things like, what about this project or that project? I will tell you, healthcare is so big and so complex. I love all projects that are going on right now. We're embracing everyone. So please don't get it wrong that only one project will go forward. That would not be the case. Let me share that with you. We want to be the leader because we actually understand AI, we understand blockchain, we have produced AI products, and we understand what it takes to actually produce more AI products for healthcare. We are building that superhighway, that platform so that other AI products can really be produced by many who really need the tools to do so. Now, so that concludes my talk today. I still have 18 seconds. Thank you so much. Appreciate it.
Thank you. All right, next we are going to have a short 10-minute talk from the event founder and host who you met yesterday, Rafael Soultanov, who is a whiz and master at ICO marketing from talking to many of the companies that use him, and he's going to share a few of his trade secrets and insights with you for 10 minutes. Thanks.
Hello. As you know, I'm Rafael Soultanov, and I just want to have a short discussion. The main topic is what's happened with the company after you had your main event, you sold your token, and you had your ICO. What's happening next? There's a life, right? There's the angry investors, there's a token that goes down on exchange, and white paper that you promised, where you promised to deliver some product results to your token holders, to your community. And this is what I'm going to talk about for the next 10-15 minutes. So I worked on a few ICOs in the past, in the last 6-7 months. I helped them to sell tokens for $20, $30, and more $1 million, to build community, to explain the value proposition. I spent before 7 years in growth marketing, where you build community, where you build product, you scale, and basically build financial model for your company. So let me show you. So in many cases, what I learned when I help companies to work on a token sale, it's 2 weeks for preparation. It's very short. And months of PR campaign. In reality, it's not PR campaign. It's more like you reach your community, explain value proposition, what you're doing, build community. You have to, of course, work on the legal solutions, paperwork, set of legal documents, different aspects. Marketing, you have to come up with marketing strategy, channels, and some of them already actually outlined by SEC that bounty program is actually not legal anymore. So we did some of these services in the past. Some of them we're already not doing. Work on the media management, token design, translations. Like I said, bounty programs is not legal anymore. Second part is advisory services, help for companies to go to the market and successfully conduct token sale. But it's again not main topic of this discussion. So we spent a few months, the last months, like 8-9 months, building these solutions for our customers. And this is kind of outline how many companies conducted their token sale. They came with the idea, tokenize existing business, start something new, assemble the team together, work on analyzing the market, what's the competitive advantage, how to go for the market, why they're doing this solution. Registered company, different jurisdictions, some of them in US even. Describe the product based on idea, work on a white paper, which is actually hard it's your basically like offering, right? Offering to the market what you're gonna do. Create a roadmap, development roadmap, because the community wanna see when you're gonna hit the market, what do you promise to deliver. So each 16 step explains a bunch of the tasks you have to conduct in order to hit the milestone, to achieve results. I'm not gonna go through each of them, you can see it's here. The final one is actually, what's interesting is that, and I started talking about this from the beginning, post-ICO, what's next? Your token goes, once you get on exchange, if it's utility token, of course, it goes up, it goes down, and if it goes down, your community is angry. They say, and we help you, you want to see your company to succeed, and you're actually not doing anything. And actually, its reality is many of them don't do anything. And I work with some companies post-ICO and help them to grow. This is where my skills came handy. You have to build community again, unify, deliver the message. Because initially you work on selling your idea. But once ICO is over, actually token sale is over, you still have to work with your community. And I help them to grow community 5-10 times, help them to deliver the messaging. You have to break down your roadmap in the smaller steps, let's say 2-3 UX releases. It's chunks of code release, screenshots, and you got to get them, see their aha moment. Let's say your protocol delivers some transaction, let them do it and say, that's it. You've done this transaction, it works for specific market, for specific connection, for specific, let's say, payment solution. It's called aha moment in growth marketing. They see it's working. And every 2 weeks, 3 weeks, you release a new prototype and show it's working. And you have to hit your milestones in development. Your community will appreciate it. And you do the marketing again, and you do the community building, you do the product development. In this case, you will get happy community of token holders. And what's interesting is your community will grow. Your market share will grow. It's like in regular business. You have to, as a CEO of the company, you have to do what? You have to increase market share of your company. You have to sell your product. You have to increase the value of your shares in exchange. You have to grow the market cap of your company. In ICO is the same in post-ICO era. You have to work on the product sales. And even if your product is not ready, then you have to build it and show in incremental steps that it's been delivered. And the community will appreciate it. And like I said, many of them will jump, many more token holders will jump and say, and they basically it will be viral marketing. They will tell everyone that this is a company that actually does honest job, that builds a product, that market it, keeps the communication channels open and explain them what's going on, where we are. And as you can see here in a screenshot, your market cap will grow, your token holders will be happy, and you basically implement your, you deliver your promise. So we have 2.5 minutes left. Do you have any questions? No questions? Yes, please. Yeah, some of them actually work on a percentage, but like I said, we're talking about post-ICO. In a post-ICO, it's not only about marketing. Yeah, like in any company, you have to do marketing, you have to build product, build community. We're talking again about product development, right? Some of them build the product and nobody can see it. You have to show the visibility of your development. Break down in smaller chunks of releases every 2-3 weeks. Explain them, and actually the key is again get them to experience this aha moment, like, oh, it works. Very small step, you know. You transact something, you create something, you post an article in decentralized world, you integrate it with another partner, you show that it works, and drive your community to try this specific specific product feature. So they will appreciate, again, community will grow, new members will come, because they see that it's only one of a few blockchain companies that deliver the promise. Your market cap will grow, your market share will grow. Okay, so I'm trying to answer that it's not about percentage that you take. It's in a post-ICO, we're talking about delivering the product and showing the results to your community in incremental steps. Yes? Yeah, that's true. They block it by specific keywords like cryptocurrency, Bitcoin, blockchain, and others. No, there's still workaround. But I'm not talking about workaround how to get on the market. First is Google is blocking it in June. Second is if you're building your community, there's different channels. It's a community, it's a Bitcoin talk, it's Telegram, there's a blockchain media, and again, there's a PR. So if you do all of this, you don't really need Facebook and Google, because it's not about marketing. Marketing is only part of the work in the post-ICO era. It's delivering the promise, building the product, releasing the chunk of code, showing them that it's working in small chunks, because it usually takes time, 6 months, 12 months. But they actually don't believe in it that you're doing anything unless you show every 2-3 weeks good releases, show PR release, video tutorials, guide them through this. Okay? Content, right? Content, right content. Mm-hmm. So in this case, you don't really need Facebook, Google. You work with your community, and it's very viral. I will repeat. I will repeat. Yes, we didn't expect. Good question. So what is the best content to share with community, and what is the process, right? This is the question, yeah. So I think I'm over, but my short answer is show them the result, show them the promise. This is only something that matters to your community. Show that it works. And since it takes a lot of time to show it, break down in smaller chunks. It's manageable. Thank you very much. I'm over.
Hello. Hi. How's everyone doing? All right. My name is Rahul, and I'm here to talk to you about how to run a successful ICO. But the way I'm going to do that is, first of all, I'll take you through a journey on my business. But let's just talk about that particular subject for a moment. How do you run a successful ICO? Step one, you go to ethereum.com and you create your token. It takes about 10 minutes. Step two, you download a picture of Bill Gates and you put him on your site and you tell everybody he's an advisor to your company. Step three. No, but seriously, I'm going to talk to you about how to create a successful ICO from somebody who did it. Last year, we created a token and we sold somewhere around 128 million, 130 million tokens, mostly to customers. We collected around 112,000 Ethereum, and it's been pretty good for us. But first, let me explain to you our business and the journey and how we decided to do this, and then we'll get into that. So, my name is Rahul, and I am the founder of a company called Unicorn. Unicorn is an eSports company. How many of you know what eSports is? Great. If I asked that question a year or two ago, nobody would put their hand up, so that's a good sign. I started this company in 2014. Unicorn is a company that is at the cutting edge of esports. I used to be with Microsoft, where I started Microsoft Ventures, and prior to that, I was a gamer. My career was built on building gaming companies. I actually started the world's first PC gaming hardware manufacturer. It was called Voodoo PC. We built the best PCs in the world specifically to play video games on. People who are competitive gamers would play with those PCs today if that company was still there. We ended up selling that to HP. Then I joined Microsoft, started Microsoft Ventures, and I was there for a little over 3 years. And one of the things that was always calling me was getting back into gaming. I always wanted to get back to be an entrepreneur. And at Microsoft, we used to study trends. We studied lots of trends. And what we would do is we would help startups by investing in them, putting a little bit of capital, and then helping them build and grow their businesses. And a couple of the trends that I found interesting. Well, first of all, my kids were heavy into video games, heavy into eSports in particular. My son, who at that time was 15 years old, kept telling me to quit Microsoft. What am I doing at that company? Go start another gaming company. You got to see how big eSports is getting. And for those of you who don't know, eSports are heavily competitive video games that are played by professional players around the world. And these players make millions of dollars, and they fill stadiums, everywhere. And it's the fastest growing sport ever. Our fastest growing sport currently. If you look at other traditional sports, some of the trends that we looked at, for example, the PGA Tour, the average fan in the PGA Tour is about 70 years old. The average fan in Major League Baseball is about 54 years old. So essentially, every day, a PGA Tour fan and a Major League Baseball fan have heart attacks, and 4 eSports fans are born. Because kids play video games, and they've been playing video games for a very long time. And then the other trend that we spotted was what's happening in Las Vegas. In particular, there's more people going to Las Vegas now than ever in the history of Las Vegas. There's like 45 million people who went to Vegas last year, and there's more people coming out this year. And Vegas is investing heavily in sports. The big challenge is they're losing revenue on the casino floor, specifically on the slot machines, which is a big revenue driver for them. They're trying their hardest, though. I'll tell you what, they're taking those old-ass slot machines and they're replacing them with digital machines with Britney Spears on it and Pitbull because they figure young people are going to just run over to that machine instead of going to the nightclub. But there's still 150-year-olds that are using those machines. And so our approach is to create these experiences inside of casinos. We have a sports book. Unicorn is basically a company that sits at the intersection of video games, gambling, or legal gambling, I should say, and sports. And what we do is we create, first and foremost, the most comprehensive sports book for esports in the world. We do all the odds on all the major tournaments. We have an odds-making machine that can predict odds on your chances of winning a particular video game. And we create content. So we're sort of like ESPN. If you go to our website, we create unique content around esports, like written and video content. We have our own tournament platform. We run tournaments online, buy-in tournaments. We also run tournaments at the MGM Grand every week. And we even have team ownership. We own a big stake in one of the hottest CSGO teams in the world, who also happens to be the most popular esports team in Germany. Now, that may not sound like a big deal, except 1 in every 5 Germans watch esports. So the space that we're in is an incredible space. One of the biggest challenges, though, is the regulation. Now, we're dealing in a space that's a highly regulated industry. We are, by the book, we operate real money betting in markets where it's completely legal to do so. So we work with regulators. We have licenses in Australia, in the Isle of Man, and we just got a license in Malta, which covers 80% of Europe. And we also started working with them on crypto, which I'll talk to you in a minute. But essentially, we're taking bets. At that time, in 2014, we raised $10 million. And we started to take bets in a couple of different countries just so we could build out our sportsbook. But we had people in Korea, people in the US, people all over the world that wanted to use the dumb platform, and they couldn't, because at that time it was a dumb platform. All it was doing was taking bets from markets where we could legally take bets from, but we had no way of engaging and growing a fan base. So what did we do? 2 things. The first thing is we created a coin. This is in 2015. We created something called the Unicoin. And the purpose of the Unicoin was to allow gamers anywhere to earn the coin for free, by connecting their Riot accounts, their Steam accounts, their gaming accounts to our platform. They could earn those tokens, and then they could play with it on our platform. They could play bet. These tokens are not transferable. They cannot be sold. They cannot be bought. You can't do anything with these tokens other than use them on our platform. But it's incredible because what we thought we'd do is we'd build out this token ecosystem, and we'd figure if customers liked it, engage the platform, and we would look for new markets as to where the hottest betting action was. And oh my God, we turned over about 250 million unicoins in 6 months. And the platform went crazy. People were entering raffles, they were playing on the platform, they were betting for free. And in the meantime, we were running real money betting in the markets that we were licensed in. At that time, it was the UK and Australia. But we noticed where the hot markets are. We know the top 10 esports markets in the world for betting action, and we know where we need to get licensed. And at the same time, we had a huge challenge. The big challenge we had was dealing with banks. We had an issue where we wanted to expand across Europe. And as you know, and at least you may know, in my business, a heavy regulated betting business, dealing with banks is a nightmare. When you have multiple banks, multiple currencies, multiple bankers who come and go as they please, it's a very difficult process. So we emailed all of our investors. We asked them, hey, we got a problem here. We either need relationships with banks quickly so we can grow this business, or we need help as to what the next step is for us. We raised $10 million with the likes of Ashton Kutcher, Mark Cuban, Sherry Redstone, Elizabeth Murdoch, like Rupert Murdoch's daughter, and also Tabcorp. It's like the largest betting operator in Australia. And Mark Cuban reached out and told us to start looking at blockchain technology. This was 2 years ago. So believe it or not, Mark Cuban's actually a fan of crypto. But back then, he said, you got to start looking at blockchain because I really think it'll help you deal with your commerce issue. So we started to look at it. We didn't know much about it, but we started to look at it from a regulated standpoint. Not from a how do we break the law standpoint, but how do we help regulators deal with things like AML, KYC. How do we deal with things like anti-sanctions bouncing? How do we deal with transaction history for betting customers, which, by the way, in our business is the most important thing, where customers have to be able to see every single transaction that they've ever placed and be able to know how much they're winning or losing. So it was like, wow, blockchain technology is the ultimate technology for this. If we apply our thinking on this, we could tie users to wallets, we could have complete KYC, complete individual verification, complete control over who's coming on our platform and knowing who they are and whether to bounce them or not. And that was sort of the thinking. And as you know, I don't need to explain to you how big the crypto market is, but I often do to a lot of people. And so here we are, unicorn, at the time, we're sitting now as on the cutting edge of esports and crypto, the two most ridiculously growing industries in the world. However, we still hadn't come up with the token concept yet. We still had the unicoin, and we were generating users. We had users all over the world. So what did we do? Last year, we approached our users, and my biggest concern was making sure that our users understood crypto. Because a lot of you who want to do ICOs don't think about that. I'm serious. I've had over 200 companies approach me saying they want me to advise them. One of them was the most funniest thing I've ever heard of. And it was a retirement community, with a token. And I'm like, holy shit, man. Have you tried using a wallet before? This is like a marketing guide. Do you know anything about crypto? How the hell do you expect an 80-year-old person to trade goddamn crypto or even to pick up your token? How do you expect this to work? It's not going to work. And if all you're doing is creating a token to raise money for some project, that is not the approach that you should be taking for this. So we polled our customers and we said, hey guys, we got the unicoin, we know you love it. Many of you are asking for more uses for the unicoin. Have you used Bitcoin before? Do you know what Ethereum is? Do you know what a crypto wallet is? We asked very generic questions. We didn't directly say, what if we turned unicoin into a crypto? And 70% of our customers responded. Unbelievably, most of them have played with Bitcoin. Many of them were interested in Bitcoin. which is huge. I mean, we're dealing in a very interesting millennial space where these customers really understand what's going on. So then we said, okay, this is what we're gonna do. We're gonna take Unicoin and we're gonna fork it. We created Unicoin Silver, which is our free token that continues to be free on the platform, and then we created Unicoin Gold. Unicoin Gold sold to over 50% customers last year. Like I said, we raised 112,000 Ethereum, and we actually have users on our platform using the token. We didn't like go sell tokens to go build a project. We actually had a working project already. All we had to do was integrate Unicoins into it. And then we created the most robust token selling platform, at least at that time, on Earth, which basically handles all the things like KYC, AML. It handles anti-sanctions bouncing, which you have to do. It handles things like individual verification, because as a betting operator, you have to make sure that customers are in a specific region at a specific time and they're not using a proxy server. We had to do all of that. And then on top of that, we had to deal with blockchain. Can you imagine if you're a betting company, right? Let's just say, okay, if you don't understand esports, let's talk about football. Let's say you're watching a football game and you want to know if you're placing bets on that game while Tom Brady's running with the ball. I'm going to bet $100 that Tom Brady's going to fumble that ball. You can do live betting in games, but could you imagine doing that on blockchain? Like, that would take 10 years, not 10 years, 15 minutes. By the time that's over, the game is over. You can't do that. So what we did was we created something called Unicorn Wallet, which is an internal blockchain that handles high-speed transactions, same thing as a regular blockchain does, but it also doesn't charge transaction fees. So people take their Unicoins from their public wallet, they put it on the Unicorn Wallet, and they can transact on our platform. And then we started going after regulators. First thing we did was we went to Malta. Malta is amazing, by the way. I don't know if you guys heard, but Binance moved to Malta today. We were in Malta 2-3 years ago, and now Malta has approved us as the first legal sports betting operation for crypto betting. They actually put us in their sandbox. So we're helping to sort of develop the sandbox, and soon you'll be able to legally bet with Unicoin Gold in 80% of Europe. So what Unicorn does, again, is we create a viewing experience for esports where people can bet and watch. We have things where customers can connect their gaming accounts to our platform. So it doesn't have to be about wagering. There's other uses for the token. If they connect their Riot, their Steam, or other accounts to the platform, they actually earn both silver and gold on the platform. The gold has to be turned over on the platform, but they earn it on the platform. They can trade their skins. How many of you know what skins are? Well, let me tell you. Skins are virtual items that you can buy in video games. Let me repeat that. Skins are virtual items that make your character look different in a video game. Skins can range in price anywhere from, say, $10 to literally $60,000, because if it's a limited skin, it'll go on a secondary market, and somebody somewhere is going to pay $60,000 for that skin. You can look it up, you can Google it and see this. So what did we do? We created a platform where a skin engine where people can take their skins, come directly to Unicorn, and say, look, I want to just give you this skin. And instead of waiting for somebody to buy it, we'll buy it. We take a margin off the skin, then we take that skin and we put it into our jackpots, and then we let them participate in jackpots. The community loves it. Tons of turnover, lots of people are coming in and they're starting to trade in their skins, and this is all about building fans. It's all about building community, and it's all about building a real token economy. Like I said, we create content. We do things like ESPN would do video content, all kinds of written esports content. We have this cool space inside of MGM where we're running weekly tournaments. There's a bunch of casinos now that want to work with us. Oh my God, the US is about to legalize sports betting. So the way it works here is, you partner, it goes state by state, you got to partner with casinos, and I think every single casino in the US is calling us because we're the best in esports. So they're calling us and want to find ways for us to partner with them. And I'm working with the regulators in the US trying to get them to understand crypto. Can you imagine being in a position where you got to deal with 2 different types of regulators? It's hard. But you know what the most important thing to remember is? Regulators are not here to make our life difficult, they're here to protect consumers. They're here to protect consumers from scams like BitConnect and USI Tech and 95% of the shitcoins that are on the ICO list that are causing downward pressure on the crypto economy. Because that's exactly what's happening. There are some good tokens out there that are getting lost in the noise, but there are some really bad players out there who last year did exactly what I said at the beginning of the presentation, which is they created a token, they downloaded a picture of some guy, they photoshopped a website, and then they have, you know, some joke where they steal tokens and coins from people all over the world. And, you know, to me, that's unacceptable. So when we built our economy, we wanted to make sure that the Unicoin was the mortar to everything that we do. The Unicoin is at the center of Unicorn's ecosystem, both Unicoin Silver and Unicoin Gold. And it's all built on blockchain technology from the ground up, and it's basically natural for our users to use it. So I'm going to quickly talk. Okay, so I already talked to you about our investors. I'm going to quickly talk to you about ICOs now. Just sort of refreshing from based on my experience how an ICO is done. Yesterday I met a guy who, I don't know if he's here today, but I met him at a previous conference. And I said, hey, tomorrow I'm speaking about how to do an ICO. And he said, oh yeah, how to do an ICO today or how to do an ICO last year, right? Because today is different than it was last year. Last year, anybody could run an ICO, it seems, right? I mean, kids were in white papers and 5 pages, whatever, and raising 10, 15, 20, $30 million. Ridiculous. So they're not as easy as they once were. And that's okay. But they're not impossible. The first thing you have to think about is what is your motivation for doing a token? If your number one motivation is to raise money, you're in it for the wrong reasons. You must stop and reconsider and go down the rest of this list, because that is not how an ICO is going to work going forward in the future. Whether it's a security token, whether it's a utility token, whether it's a currency, it doesn't matter. It shouldn't be about raising money. You must have a clear application for blockchain. Because if you don't have a clear application for blockchain, why are you here? Because you can't just say, I have a token and I'm going to, you know, have a token economy and no blockchain. Like, you just can't do that. Your platform has to have a clear application for blockchain. And by the way, there's tons of great applications for blockchain. Anything that requires trust, transparency, anything, basically anything in commerce, healthcare, you know, banking, gambling, there's lots of spaces, insurance, lots of spaces that could use blockchain technology. So you really got to be creative about how you're going to use blockchain. By the way, the blockchain community won't embrace you unless you understand this part. And if you don't have the blockchain community behind you, you might as well just pack it in, because they're just going to bash you. Anyone heard of Bitcoin 2.0? Pretty sweet. It's got 2 eyes in it. It's got Steven Seagal as their spokesperson. Man, those guys, it's not funny, because I'll tell you what, those guys, they're running ads on the radio talking about how this shit is Bitcoin 2.0 and it's going to replace Bitcoin. No wonder the SEC is going crazy. Like, no wonder the government is going nuts. When you got Steven Seagal saying, you know, I've got a token I created on the Ethereum platform and it's going to replace Bitcoin and we're selling it for $5 each, doesn't that boil your blood, thinking that your mom or your uncle or your cousin or somebody might end up buying that? So you have to have a clear application for blockchain. The third thing is, do you understand your customer? Because if you come to me and you say you're going to open up a retirement community on the blockchain, I'm going to politely tell you to fuck off. Because you cannot do that, right? You can clap for that. That's okay. So you have to understand your customer and your customer base and make sure that they understand. And by the way, they don't have to completely understand. If they don't, you have to make it easy for them. You have to make it super simple. You know, you have to take the Jack's wallet and make it even easier for them to get their tokens and to work on your platform. Do you have a working product? Do you have an active community? Do you have a team that eats, lives, breathes, and sleeps your platform? If you're just 5 people who want to ICO, this won't work. But if you're 5 people who have a passion about something that they're working on, that happens to have a blockchain, you know, application, that happens to have a community of fans, that happens to have a culture, that becomes the soul of your brand. And the brand is a living, breathing entity for your token. Your token is the last thing that comes up, okay? So if you really think about this, a community is everything. And I'm not just talking about the Telegram community that you set up to sell your ICO, because that community is fickle. They will come and they will go. And they don't give a shit about you or your customer. All they care about is the speculation of your token going up. I'm talking about your core community who loves your platform. You have to have that. Do you remember when Apple was going bankrupt and Steve Jobs came on stage, he returned back to the company, and everybody thought Apple was going to die? And who was there in the audience watching him? Is every word, his fans, right? That's what it's all about. And very few companies understand that, how to build a fan base. You have to build that. You better have a damn good lawyer and accounting firm. Oh my God. So, I love Perkins Coie. I dealt with Perkins Coie. It's important to understand the law. It's important to understand the Howey test. It's important to at least understand where the SEC is coming from. Right now, they haven't really come up with a formal position yet, but it's important to understand the difference between a true utility and a security. If you're promising returns on your token, you're selling a security. I don't care. If you're giving interest, if you're giving dividends or any of that stuff, bonuses, you're probably breaking the law. So you want to be careful. And as far as accounting, oh my God, can you imagine the accounting that we have to go through? We not only did we have to do the accounting on the tokens that we collected during the token sale, right? The Ethereum that we collected, I should say, and the time that we collected it, and the mark-to-market accounting that we have to do. But then on top of that, every time somebody comes to our platform, trades in the skin for a UKG, and then the UKG goes out, we have to account for that. Every time they come back and they use the UKG in a raffle, we have to account for that. Every time they come back and they do a bet, we got to account for that. Every single thing we got to account for. Crypto accounting is hard. Find a good crypto accounting firm. We found one in San Francisco. I think it's very important, and I think it just adds to legitimacy of your business. And there's so many problems to be solved in the blockchain space that don't require a token. What I mean by that is, there was a VC panel here earlier, and there were some people saying, yeah, I'd invest 80% tokens, 20% equity. No, I'd invest 100% equity. VC is getting disrupted no matter what. No matter what. Whether they like it or not, they're getting disrupted. Tokens are here. Now, everything will be tokenized, I think. I think you'll see real estate get tokenized. I think you'll see lots of things get tokenized. But there's so many problems in the blockchain space that need to be solved in order to build this space out. If you want to see Bitcoin hit $25,000, number one thing we need is governments to support it. Governments need to regulate it in a way that is not anti-innovation. So they have to support innovation. Number two is it has to be easy to use for customers. Has to be easy for people to be able to transact with it. And number three is it has to, you have to have banks that support it. Because when you're running around with a bunch of Ethereum and Bitcoin as a CEO, that's hard enough. But imagine having to bank all of the stuff that you're holding in reserves. All of that stuff is difficult. So banks need to support it. So that's it. I am opening up for questions. I would like you to raise your hand for a microphone. And by the way, if you want to contact me, the best way to contact me is on Twitter at Rahul Sood. Okay, hands up. Microphone's here. There you go.
Hi. Oh, yeah, sure. So if you can tell us more about how did you solve the problem of building a token, a cryptocurrency where you have wallets and all the complexity, and making it like super easy for a person to acquire that token, and where do they acquire the token from?
Sure. So the super easy to acquire the token. Accessibility is very key for tokens, right? So the first and most obvious thing is you try and get, on exchanges, or you try and work with exchanges, usually through people who backed your token, or the community will go out, and you want to get like vast, exchange access. Now, exchanges now are getting harder to list tokens because they won't list just any token anymore. You'll be on Ether Delta, no problem. They'll list anything. They'll list friggin' BitConnect. If BitConnect came back, it'd be on Ether Delta. But that's not good. You need access. You need to get on places like Bittrex. You need to get on places like OKEX. You need to get on every single major exchange around the world for access. And then the second part is you also need it to be easy for the users to acquire the tokens on the platform. So, I like things like Shapeshift. I think that's interesting. I think there's other applications that could come out where it makes it easy for users to be able to use the platform. How did we do it? We basically built a user-centric blockchain application where the blockchain's in the background. The users don't realize it's there until they see it. but it's not one of those weird things where you got to enter in addresses and all that stuff. The only thing they do is they have to enter in a private key for their Unicorn wallet because the user is always the custodian of their own tokens. We can never be that custodian. So they have to use a private key. They have to understand what that means. Essentially, all I can say is just get a good user experience person and engineer it from user first back into blockchain. Next question. Yes.
Thanks, Rahul. That was fascinating. My name's Claire. I'm from Isonomy. We have a digital AML compliance platform that allows blockchain companies to comply across multiple jurisdictions. And I was interested to hear about what you're saying about the regulators. And our experience is that regulators are actually more amenable, constructive, and forward-thinking than banks. I'm interested, do you have a banking relationship now, and how have you managed to actually convince them?
Well, we do have a banking relationship because we came from a highly regulated industry that understands that you need AML and KYC. By the way, if you're doing a token sale and you're doing the old smart contract thing, where you have a smart contract on an Ethereum wallet and you're anonymously getting tokens, I will hack your smart contract in 2 seconds. No problem. I can do that because there's lots of vulnerabilities in it. Number two, and the most important thing is, no bank will touch you. You will never be able to bank ever again. So if you want to deal with, Ethereum and tokens the rest of your life, go for it. But good luck in trying to find a legit bank who's going to work with you, especially one in the US. Or even, you might go super far Eastern Europe and find some bank somewhere. But my recommendation is that you do deal with a platform like that, where you do have full AML. So yes, for us, we do have a banking relationship. And we have multiple banking relationships and more coming. Yep. Next question. Next question. Down there, okay. Yes. Run, baby, run with that mic. There he goes. And he's off. There it is.
Hi, Raul. I only learned about Unicorn and Unicorn Gold today, so correct me if I'm missing something, but as I understand, most of Unicorn Gold's functionality could be replaced by Ethereum. So why did you opt for Unicorn Gold as opposed to using a store
Awesome
value?
question. Great question. So Unicorn is our brand, right? It's not just a logo on a shirt. It's foundational to create a brand. I believe you have to have community, you have to have a product that they love, and you have to have a culture that people live, eat, breathe, and sleep. And as a betting operator, I can't think of one betting operator in the world, whether it's Tabcorp, whether it's Bet365, whether it's anybody, where people would go around and wear their merchandise. Because nobody likes them, right? They're just a utility. And if you're from the UK or from Australia or wherever, you'll know what I'm talking about. Nobody likes those guys. But they'll bet with them because they like to bet. But they hate the company, or they don't like the brand. So for us, it was about brand building, and in a space where fans are everything, we wanted to create an identity within that space, because esports is huge, hundreds of millions of fans out there, and Unicorn is becoming synonymous with esports. So we thought, we need to create a branded experience, and the token is the center of our entire ecosystem. That's why we did that. Otherwise, you're absolutely right. We could have used any token. We could use any crypto. But that's more of a transactional relationship versus building a group of evangelists who are your fans and customers. Next question. Right here. Do microphone, please. Raise your hand high. Thank you. Perfect. It's coming up. We need people on the other side to hear.
Okay. So what if instead of going ICO, if the product itself has intrinsic value and the token is a utility token, do we have to go ICO? Can we just skip the ICO, just launch directly onto public exchanges?
No. I mean, sure, I guess, if a public exchange will list you. You want users to have your token, right? So I'm assuming you have users who are buying the token. And if that's the case and you have a user economy, then yeah, you don't have to ICO. The reason that people ICO is to get exposure for their token to the greater market. But if you're fortunate enough, which very few people are, if you're fortunate enough to have customers who are buying your token, you could easily just go to an exchange and list it, assuming the exchange agrees with you that it's a utility and not a security. Absolutely. And by the way, I do believe in security tokens. I do believe that it makes sense. I believe that companies will start to tokenize. I think that real estate will tokenize. I think a lot of things will tokenize, but it requires cooperation from government and also exchanges to become security-approved exchanges. So I think that is the future. I don't think I don't think it means that utility tokens disappear. I think there is a space, and there will continue to be a space for utility tokens. Question behind you. Green shirt.
Hey, I would like to know a little bit more about the different dynamics for the gold and silver coins.
Sure. Well, they're basically the same coin. The big difference is you can't bet with gold in markets where we're not licensed or registered to operate gold betting. We consider gold like any sort of thing of value. So with that being said, it's amazing, but like, our number 4 market is Korea, and it's almost number 3. And what's crazy about that is we're not localized for Korea. Our platform is purely in English. So we have a platform that runs in Korea, and people are using it, using silver all day long, but they're earning gold, and they're using gold in other ways. And how do I communicate with them? Well, we go to Kakotak, which most Koreans use, and I go on there, and they communicate with emojis and Korean. I only understand the emojis. I'm not kidding you. You go on there, and you'll see like dancing bears if they're happy, or man slamming bee in ground if he's mad. So I will go on Kakotak, and I'll submit some news. I'm saying, hey, everybody, I do it in English. Hey, everybody, check out what Unicorn's doing today. And I wait like 5 seconds, and then boom, all the emojis come up, and I can tell if they're happy or mad. But we need to localize, and we will localize, but that's where we use silver. We use silver in Asia. We use silver in lots of places. Okay, next question. Anything else? Are we good?
I think we're going to end it right now.
All right.
Okay, let's give Raul
Thank you. Getting the hook. All right, thanks.
All right, thank you for a great session. So before we start the last session before lunch, a few more comments. Again, I want to thank our general sponsor, Crypterium, for helping host this great first event. Let's give them a round of applause, and thanks for their support. And I hope you'll meet them at their booth later. After this speaker at 12:30, from 12:30 to 1:30 is the lunch hour. And as we said yesterday, if you have a sticker, then you get lunch. And for everyone else who doesn't have a colored sticker, you can feel free to come into the expo hall, but we just can't give you lunch. And then everyone will resume here today at 1:30. I also mentioned yesterday, if you weren't here, I'm Zahava Stroud, owner of Angel Launch. I produce tech events in Silicon Valley, and I partnered with Rafael for this event. I produce weekly events connecting startups to investors in all markets. And I have 2 events next week. I have a free event Tuesday in San Francisco, which is a demo showcase with a speaker who's here today. Terrence Yang is going to talk about investing trends in blockchain and ICOs, and a speaker on email marketing. You can go to angellaunch.com to sign up. And Thursday, there's an event with about 8 investors on AI and robotics in Palo Alto. And there's also a free Fintech summit. So it's all on the website, angellaunch.com. And finally, I want to take this chance, because I know not everyone comes back after lunch, to thank all of our sponsors. So let's give a round of applause who helped support this event today. And during lunch, we are going to have after you get lunch, an informal discussion at the Crypterium booth to talk more about some of the in-depth issues from today. Okay, now I'd like to introduce Alexei Kurashenko, who is going to I'm not even sure, talk to you.
1, 2. Hello. My name is Alexei Vladimirovich Kurashenko. Try to remember this name and sleep with this. So, what we do. So, today we talk about, of course, how to raise money for ICO. It's a hot topic. And we talk from different angle. We talk from angle how to work with the big whales, how to prepare yourself to speak with the investors. So, let's start. Oh, we have no timer. This evil machine is working? Yeah, it's working. So, before we start, I will not promise you to raise any funds. It's a disclaimer. So, I cannot give you any kind of warranty about the fundraising results. And your ICO can be unsuccessful. In 90%, the ICOs are really unsuccessful and even reach an if soft cap. So I can give you only one warranty. If you don't you don't try anything, in 100% cases you get nothing. So that's true. So how many of you are here about launching your ICO next month? Raise your hands, please. Okay, you are in the right place. Thank you. And how many of you want to raise from 10 to 20 million? So about your hard cap or more. That's good. That's good. So most of the ICO, there is a deal. Before, in a classical venture game, if you raise 5 million, it's round B, maybe, round A, B. But here is you raise 5 million today. Don't worry, don't cry, maybe next time. That's true. So, and many projects right now, they just reach maybe 2 or 3 million and, well, maybe next time. And with a lot of successful projects here. That's another side. So, do you think why? So, now it's a very interesting game. So, why some projects are hunted for investors, but others raise only 5 to 10 million? Or why investor didn't catch you can offer them really good deal, right? So give them huge discount or a bonus, or I see a lot of deals like, we'll give you 100% bonus if you will be our core investor, right? Or no, we can give you 200%. We can sign anything, just give us money. So I've seen a lot of investors. Alex, can you help us? Can find a core investor. So we are ready for everything. So just give us money. Well, it doesn't work. And it's really hard to find the core investor. Even if you have an amazing team, good traction, real product, sometimes it's really hard. So I know a lot of projects who are looking for a core investor because it's very important to find the core investor on early stage before you launch your ICO. That is very important. So my advice, don't announce your ICO before you get a core investor. That's very important because if you announce and you have a limited time, it's fire everywhere. It's like hell. No one was. So my story, how I involved in crypto is short. So my first startup was Expert System in 2012 with Ilya Churakov. Ilya, where you are? Ilya is a tall guy from Crypterium. So we launched our webinar platform. And before we start playing the investors game, we actually invest our own pocket money to build the platform, and we create the BaaS. So we invite a lot of experts in our platform, create a huge free, like a seminar, and we invite a guy from Guinness record, and he shoots the record and give a certificate. Yes, the expert system are good, so you hit a record, World Guinness, and after that we get about 200 PR publication articles and everywhere. And only after that, we have an offer for half a million. So it's before crypto. And I was so scared to take this money. So it's another side. So how many of you think, well, if I get core investor, an early stage, they will command me, or it's like a take money from someone who will maybe not guy, manage you. Nobody wants that. So, and we are scared about that. And in half of 7 months, we lost the company because we have a huge burn rate. So, and we cannot play anymore. But this story, so maybe I need to share you a successful story. But that story teach me, so definitely I need to learn something. And that's why in 2016, I take my family and fly to Silicon Valley and go to Founder Institute. It's a pretty interesting program where people teach you how to pitch. It's like a program pitch or die. In 3 minutes, you need to pitch. or every week someone will be eliminated. So in the beginning of the project, it was 37 of us, and in the final, only 5. That's a good school to how to train yourself and pitch to investors. So I didn't know that, so it was fun. And yes, of course, I can make a 5 grammar mistakes in one present, in one word. And next, after that, my friends asked, so Alex, can you help us with the ICO? Can you organize an event for us with investor, or can you shoot a video with the advisors? So, and we start work with this Crypterium. So we shoot a video with the Theodore. He's the co-founder of TechCrunch. And I have no idea what the ICO is. I think, oh, ICO is a bubble, or cryptocurrency is a scam, or whatever, that people always think about the cryptocurrency outside of the bubble. But now I'm inside with you guys. So it was fun, and the Crypterium project really successful, and everyone know about the Crypterium right now. So yes, they raised 51 million, and a couple of things that actually work. So I can share with you. So first, we take that you can do. Take your advisors and let them work for you. Just not be on your web page. The K-tier, we organize webinar with him. Write the notes. This is very important. Push your advisors to weekly webinars. That's simple. That I learned from my previous startup. It works. And there is more. How many of you know that ICO or advertising is banned on the Facebook and Google? What are you going to do? Any ideas? Huh? Exactly. And that's the trick how to avoid. Because if you put yourself like an expert, huh? Answer it. Webinar. You can organize a webinar with a founder or with an advisor and spend as much as you can. Nobody ban you. Because you not promote an ICO, right? Yes or yes? Does that make sense? So, at that point, oh, wow, we can take all the expertise that we learned from my webinar business and put it into ICOs. No one can ban you. If you're a founder, if you want to share some message, some good information, yes, definitely you need to write, and you don't need to write anything about token or about cryptocurrency. But we have some special language. So everyone knows, fly to the moon, right? So you can use our special language to promote anything, because no one can ban you if you are maybe tricky enough. That's the point. So, and I start jumping from one event to another and speak with people. So, and I realized, and I have built a really good network of investors from one side and ICO from another side. And we started organizing small events for let people to do fundraising for themselves. So, what's next? So we organize like a private New York road show with my partner Konstantin. So Konstantin worked with oracles and they helped them to raise 47 million. Is it correct? Yep, 47 million. Peijin right now on the road, it's less than 1 million, but they're on a pre-ICO right now. And 80% of projects are under NDA. So I can share a lot of examples I want, but a lot of legal stuff on this sphere. So, and I found another partner, so in the Middle East. So he organized car racing events, and rich people of Dubai come to the room and watch how the car crashes, right? So Lambo racing, Porsche racing, Ferrari racing. So Dubai people, they love this stuff, right? So it's different than Silicon Valley, and it's look like a meeting room, VIP lounge, and you sit or stay and talk with rich people of Dubai about your ICO. So you do yourself, so you must be prepared to this talk, right? So that's why. So we don't do interest. We don't do work for you. We just organize events. So an Asian roadshow, it's pretty longer. And they have partners in Asia, so they organize this roadshow for PlayK. They raised 15 million. Skychain, 2.2 million on pre-ICO, and Model Trade, about 7.4 million. Is it good enough for you? Okay, so it's not 100 million, so we don't expect 100 million number. So if someone promised me, oh yeah, we help you raise 100 million, because the very hard part to raise first 10 millions, that's a game changer. If you raise 10 million, that's much easier. So you have a lot of choices. You can spend half of the sum to your ad campaign, right? And do you know the budget? So when I know the budget of Crypterium project, I was shocked. Because I talked with the founder, Vladimir, and he said, well, we spent 100K a day. What? 100K a day? Are you joking? No. That is actually what is working. So Crypterium have a whole crowd sale because of that. So let's think about it. So if you have 10 million on a pre-ICO, and you have you've spent at least 5 million on advertising right now, well, your chances is high. Yes or yes? Do you agree or not? What do you think about it? So that's why the first 10 million very important. So if you don't have at least 5 million, my advice, don't go to ICO. So that's the situation. Or if you have a brilliant team and you have really good friends who can invest you, but it's different. What is your friends? Who are they, right? Who they are. So if your friends are venture capitalists and you have a friendship with the funds and you just have a drink a coffee and show them on a napkin what you want to build, and they know who you are and your story and your success story, probably they can invest you 10 million, 20 million early stage without anything, and without any white paper. But it's depending who's your friend. That is very important. But if you don't have a friends with such numbers, better prepare to long ride, roadshow, meet a lot of new people, because in a short time. So it takes about, we prepare these meetings for from 15 to 30 days. It depends on how busy we are. And next, for example, if you fly to New York, prepare yourself to have a lot of events in 1 week. You probably will meet from 15 to 30 investors. So I can't give you any warranty how many people will be interested in your project. But it's happened all the time. So I just flew from New York. It's pretty cold. So, and we organize the same small events for our clients. So what's next? Step-by-step algorithm. Here. Yeah, I write a book, How to Launch Your ICO. So a lot of stuff, 42 pages. Just take a camera and you will see the opt-in page. And if you want a PR to I have a lot of subscribers, and I have 70,000 subscribers. And I can just share information for free about your project if you write me a testimonial about my book. Fair deal, right? So shoot me what you think about. Oh yeah, you can say, oh, your book is totally bullshit. Okay, that's okay. That's your opinion. I will not publish it, but who knows? So, is it downloaded? Now it's moment of truth. Is it works? Oh, congratulations. Now you're in my spam list. So, go next. Yeah, last picture. Yay, welcome. So, 3 advice about ICO fundraising. It's hard and take about from 1 to 3 months. And don't announce your ICO until you get a core investors. So that is very important, that I'll talk advice. So second, don't outsource fundraising. If you think that you hire someone who will do work for you, you'll be disappointed. You must be on every single meeting with investors. You need a handshake, make a first impression. Second, you need a close deal. So some guys can help you open the doors, but definitely you need to close the deals. So no one will do it for you. That is true. So if someone promised, I don't believe it. So, and be ready to pay high price. So fundraising are very expensive service. For example, to organize car race event in Dubai, it will probably will cost you $500,000. It will be 9 events for Formula 1. I have one special exclusive package. It's $500,000 to organize 9 events. It's pretty expensive. So organize, for example, a couple of series of events for New York. It will cost about $100K. So in that moment, most of the conversations are, oh, why do you need to pay for that? Okay, you can do it yourself. No problem. Read my book and you can find everything for free. So, next. Boom. What's the difference between advice and consulting? Any suggestions? What's the difference between advice and consulting? Yes, yes. Thank you, sir. And my advice, take consulting. So, okay. No, I have a couple of them. So, as I told before, so rise from 2 to 5 million before you announce any date about your ICO. That is very important. So, second, invest those money into marketing and roadshow. As I said, so Crypterium spent a lot of money to raise this and close the hard cap. Hard cap, it's, I think, some reason why hard cap call it hard cap. Speak public every week and prepare your community to public exchange. That is very important. So, before you run an ICO or announce something, you can jump to events and be the better advice that I can give you. Bring your own camera. You know why? Yes, organizer, if you speak public, as a sponsor, they can send you a video. Of course, but it maybe takes 1 week or 3 weeks. I just spoke in Dallas, 15th of February, and just 2 weeks ago they sent me my video. But who want the old news, right? So shut the video immediately and send to your community. That is very important. If you feed them every single week, you prepare like awareness. Oh, we are here. Maybe you know the guys from ARC. They are not my clients, but I like their style. What they do, they have a slide, and they have a like, oh, this is our traction. So we developed this, and it's like a progress bar. You get it? So every single week you have the same slides, but one slide is always changed. It's your traction, how you perform, what you've done. Make sense? Yes or yes? That is very important trick. Because as Rafael said, yes, you need to show the result. But sometimes it's a process, right? You can show them a process because you cannot deliver a result every single week. If you can, that's perfect. But what if you cannot? And that's why you have a slide on your presentation that show where are you, how it's going. You deliver, always you deliver the news. And the next thing, so I seen a lady, she already done an ICO, and she have no slide. She have like, I have a honest personal story. And every week she jumped from events and spent a lot of money, and she shared her story every single time. And different stories, 0 slides. Like, oh, she just talked with people. What do you think about this? So we think about maybe we go this way or this way. What do you think about it? Make sense? You involve people to your project. You just not pitch them then, oh yeah, we're on this exchange, this exchange, this exchange. No, oh, we think about that. What do you think about it? And when people think that they are part of it, that they belong to this community, that is very important because if they feel that they are part of it, they will hold your tokens. Make sense? Not only about your attraction, it's about how people feel it. Maybe, yeah, maybe token goes down, but I hold it because I believe in this company. I feel that I put something more than money. If they put something more than money, that's one, how to say in English? It's rational or irrational, right? It's irrational reason why they keep it. Because we think that we are rational, right? But we are not. We do something because we want to do something. That's very important. And Rafael talked about post-ICO campaign, right? I expect spend at least $500,000 every single month to your ad campaign. Because if there is no more buyers, what will happen with your token? Any ideas? Because just few people know about your ICO. Yes, they're in your community. Sometimes you think, oh yeah, everyone knows about me. But it's not true. So keep burning your money on the ad campaign. So you can hire Rafael or another guy who will manage this campaign for you. But the reason why I'm talking about Rafael, because yes, he's my partner for this conference. And I've seen what he do with the Loon token and how he spends his money, how it's very, very interesting how you can do it, maybe with him or without him. But when you close your hard cap, let's say you are a successful ICO, another trick for you. If you shoot the video every single week, bring more new leads to your community, to your list, to your Telegram group, and every single week you send them a video from the conference, CEO talking about our plans, what we do this week. It may be like a video from your office. It shouldn't be, oh, super fancy video on a professional camera, light everywhere, like explosions. No, just take a web camera and that's it. 5-minute talk every single week. It's simple. So, because if you don't do that, people think, well, we have no idea what's going on. So the hard cap closed, and maybe I have a bad decision. The reason why people dump your token, some of them, if they are not professional brokers, most of them are not. So the reason, because sometimes people think that they make a bad decision, and they feel bad about themselves. Make sense? And it's not about money. If they think, oh, I'm a loser because I'm investing buy these tokens, and they are maybe they should talk, I have no idea what's going on. You need to feed the news. That is very important. So on the post-ICO campaign, every single week you deliver something new, something new, something new. And in the final week, before you go to exchange, in that moment you need the professional videos. I have a script for you, so it should be scripted and how you work with their objections, new token buyers, so you prepare new buyers. It's like a small ad campaign. It's the same story what Apple do. They announce the product, you cannot buy right now, prepare your money, soon, 2 weeks before the start, they announce, yes, in this shop you can buy this, limited quantity, right? Come on, they can supply everything. But you need to hunt for a new iPhone X, right? The same story in the gaming industry, the Blizzard. One of the best examples in the gaming industry is the Blizzard company. Who knows about the Blizzard? I love StarCraft. So spent a lot of hours playing strategies. But I see what their marketing strategy. They prepare something new Oh, coming soon. The same story, coming soon. And the most important 24 hours before you go to exchange, you prepare the series of letters and messages to your social media, how they can buy your tokens, how it's very important, show them testimonials, some guys from an investment site who's talking about, yes, it's the best investment that I made in my life, right? So, or some videos behind the scenes, how you work, how your team hustling, oh yeah, some crazy stuff. So, but it's scripted crazy stuff. That is very important. 5 seconds? Oh, 5 minutes. Oh, we have time. So, yeah. I almost finished. So, and that is moment of truth, because the more money on a post-ICO, because fundraising, it's just like a first fuel to your campaign. You can burn all all your money that you get from investors on early pre-ICO stage. You go to ICO, you raise more, right? You spend a couple of bucks to advertising. And that's most important part on a post-ICO. And this should be, everything should be scripted and prepared. Like it's a real product launch when you go to exchange. So, and only after that, you and your token holders probably can get 50x. And then you buy a Lambo. Only that, not on a pre-ICO. I know the story, so investors have a meeting, investor and the founder have a meeting, so they have a dinner, so, and he just raised a couple of million on his project, and after dinner, investor and the founder, they walk to parking, founder go left, investor go left, go right, he follow him right. What's going on? I just want to be sure, what is your car? Oh, it's old Honda Civic. Oh, you are fine. So that's very important, because I think only when you go to exchange on your successful on aftermarket, at that moment you can spend a couple of bucks for yourself. Yeah, because yeah, definitely we do it because if you want to live better life, so maybe enjoy your life. So making money is good. How say it? Greed is good. So it's okay. But is it helpful for you guys? Yes or yes? Oh, maybe no. Okay. What is the most important part was in the presentation? Any ideas? What's finding, or what is your aha for today was from my presentation? Any ideas? Oh yeah. Oh yeah, it's expensive journey. So, okay, any questions? Happy to answer? Oh yeah, Alex, finish and we go to lunch. Oh yeah, we have a one question. 1 second, sir.
Hi, my name is Dr. Can Ansai. I want to raise money for my symptom diagnosis app, and I'm thinking about starting an ICO, but it's quite expensive. So are there ways that I can hire a team for marketing and everything else that's involved in an ICO, and they would be willing to accept the success fee? That means once we raise the money, they get a certain percentage so that I don't have to pay them up front?
Oh, it's a good question. You asked me to do something illegal. Because I'm not a broker-dealer, so I cannot charge a success fee. So what I can do for you, it's consult you, organize a couple of events for you, and you do it yourselves, right? So yes, if you don't have the money, look for investors or for a core investor. Look for a guy who believes personally in you. That is very important. If you have no money, don't go to ICO. Yes, you can do bootstrapping. If you hire a team and pay them in your tokens, and they completely believe in you, but at least they need feed their family about half a year while you prepare everything, run everything. So, and some people will disappear on this journey. definitely find the core investor or find a core client who will pay you, and when you have money, go to an ICO. Okay, is it an answer? Thank you very much. You're a good audience. Thank you.
One more question?
One more question? Okay, the last one.
It won't take long. Could you show the QR code again, please? You've been talking a lot of sense, and I'd like to read your book.
Yeah, make a shot. Yeah.
All right, let's give a round of applause. Thank you to Alexei.
Thank you.
The mic is on.
Yeah. Oh.
All right, am I on now? First of all, I do have one of our attendees asked me, he's trying to hire a cryptographer. Do we have anyone here who is a cryptographer? I don't, to be honest, not sure what that is, but all right, I guess we don't. All right, thank you. If there is somebody, see me and I'll introduce you to the attendee who wants to hire somebody. Okay, so here are the directions. As I said, if you have a color code, any color badge, you get lunch. If you do not have a code, you are welcome to come to the exhibit hall. We will have an informal discussion at the Crypterion booth. And we will resume here promptly at 1:30. So we look forward to seeing you then. One more important thing. We had some people ask us who are interested in taking a Napa Valley wine tour tomorrow. We did not initially have enough people. So we don't know what the cost is at this point. It would be something like maybe $150 from San Francisco for the day to 3 wineries. If it's something you're interested in, come by the table, leave us your name and number. We're going to make some calls, and if we get enough people, we may organize a trip for tomorrow.